Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice. Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime. You know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it was like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company, and that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called baby faces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to the big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook. or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean, but also
While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission, track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030. 11
of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your green in brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast, and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions, and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube size concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call it biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Yeah, it feels like a Monday.
It does. I mean, you got a big smile on your face, though.
I do, because this is kind of my favorite part of the day. I have to tell you, when we
It
get
is.
to the studio and we just go, yeah, it's Monday, April 19th, 2021. We're live in our Bloomberg Interactive Broker studio. We are live on YouTube, streaming on YouTube. But investors, Tim, definitely taking a breather, backing off those kind of record after record closes that we've seen.
Yeah, we're seeing investors take a step back, wait for earnings. We have a third of Dow companies reporting this week. Tech also tumbling today because of a couple big stories that we're going to talk about throughout the day today.
Yeah, two 2020 high flyers
Yeah.
not having such a good day. So we'll get into that in just a moment. First up, though, let's set the day with a look at that trading day. We've got just, 2 hours to go, Charlie.
But who's counting?
Thank you. Right. There you
Check
go.
the clock. Where am I?
All right. Happy Monday to you both. No doubt you'll be talking about both Peloton and Tesla. Guessing those are the two techs in focus today. Let's begin with those numbers. Peloton shares down now by 8.1%, and Tesla shares, they're tumbling now by 3.7%. It is a down day right now with the Dow, the S&P, NASDAQ all declining. Technology shares dragging down the S&P 500, which, by the way, is on track for its biggest drop in almost 4 weeks, down 27 points right now, down by about 0.7%. The Dow down 162, lower by 0.5%. NASDAQ down 152, a drop there of 1.1%. 10-year yield 1.59%. Gold now lower by $5 the ounce, down 0.3%, 1771. And West Texas Intermediate crude up 0.5%, 63.42 a barrel. Bottom line here, stocks pulling back from records as investors await the heart of earnings season and more economic data later in the week. Speaking of earnings, after the bell today, we will be hearing from IBM, down now by about 0.3%, and UAL, United Airlines Holdings, lower now by 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Let's set the market drivers report. Let's get to the Business Week agenda. Dave Wilson, stocks editor at Bloomberg News. Mike McClone, commodity strategist at Bloomberg Intelligence. He's from our Bloomberg New York City bureau. Dave Wilson on the remote access in New Jersey. Dave, let's kick it off with you. We've had 4 in a row for the S&P and Dow higher weekly consecutive gains. NASDAQ, 3 weeks of consecutive gains. It's a little bit of a different tone today.
It is really kind of blah in the market, you could argue. Looking at the 11 main industry groups in the S&P 500, real estate's little change. Everything else is down. You have sort of the tech-related areas of the market, at least a couple of them leading the way. Technology as a group, and then beyond that, consumer discretionary, which is where you find Tesla down 3.5% after that fatal crash in Texas over the weekend, where authorities said no one appeared to be driving. So, that becomes an issue.
That was wait, what?
Yeah.
Because there was somebody in the passenger seat in the front row, and then somebody in the back seat. So it did look like somebody apparently was not running. Yeah.
Yeah.
It is. So, I mean, there's a lot, obviously, that we don't know at this point. But
Correct.
We have seen Tesla shares take a hit. Like I say, down 3.6% at the moment, and they were off by more earlier in the day. So, that's clearly getting people's attention. And since Charlie Pellet mentioned Peloton, we might as well go there as well. The shares down more than 8% after U.S. regulators told people if they had this particular model, the Tread Plus exercise machine, that they shouldn't use it if there are young children or pets at home, because there have been some incidents, including one death, unfortunately, of a child.
Maybe keep your kids and pets away from it.
Yeah.
I know. It's like, the question is, what do people... And there was a big report over the weekend in the Washington Post about what Peloton has been doing to try to push back on this.
Right.
Yeah, it's a big story.
Yeah. Another big story, certainly already here in 2021, is digital currencies. Mike McClone, come on in on it. This is your thing. Bitcoin down again. What do we need to know as investors as we continue to watch Dogecoin and Bitcoin, and we're still reeling from Coinbase last week?
Hey, Carol, well, I think the key difference between Doge and Bitcoin is Dogecoin is just plain a casino. It's real, but it's just plain fun for people who don't take you seriously, and they're just knocking it around in social media and double dog daring their friends. And
people, there's a picture of a dog on it, right?
and the difference is then there's Bitcoin. Bitcoin's very serious, and I think we're seeing bids coming in below the market. It's well on its way to becoming a digital reserve asset, but I've never seen a really good market that doesn't have good signs of speculation. We're seeing that in this space. And one key thing I want to note is what really put the peak in last week was when Coinbase launched. Now, if you look at Coinbase, its average price since its launch was $335, and right now it's $332. It's been very, very orderly. So this is an orderly adjustment I see in a bull market. Bitcoin's getting back to near good support. And I see 50,000 as the key level. Right now we're 55. I don't know if we're going to get to that 50,000 level because I sense bids coming in below the market.
Do you ever, Dave, start to see movements in cryptocurrency affecting markets?
Well,
equity markets?
Not so much in the broader sense, at least to this point.
I mean, I think back to March of last year, right? And I think back to when we saw the decline in the S&P 500, the huge decline in the S&P 500, and also the huge decline in cryptocurrency then, right? But other than that, do these things move in tandem?
Well, you just have to think that they're relatively risky assets if you look sort of across the investable universe, so to speak. And, it's digital currencies in general is sort of at one extreme on that kind of a spectrum. So, you can tie it into stocks that way. I mean, there are some more direct links, especially now that Coinbase is public. You have other companies that are investing in the digital currencies. I mean, MicroStrategy is one that comes to mind. But still, you kind of have to take a step back and look at it, I suppose, from an investment perspective. How much risk do you have to be willing to take to invest in stocks, to invest in Bitcoin? And to that extent, you might well see a connection between the two.
Mike McClone, I do wonder, though, Coinbase, it's a way of just kind of playing whatever digital currencies, right? Is that kind of a safer play, or what's the thinking on that?
Well, I don't know if it's safer, but it's certainly part of the mainstream. So what are the next iterations? Coinbase around almost $60-70 billion. It makes money. It's next, unless something serious goes wrong, it's going to be put in the major indices. So that's just part of the trickle up, part of the dangling carrot you have to look forward to. And it's just pointing out that this space is serious. It's no longer things like Jamie Dimon pointed out a few years ago or rat poison squared, what Warren Buffett said. So I think the iteration to really key thing that's keeping me, it's always just like life in markets. You always want to look forward to something to keep you bullish. And there's a significant dangling carrot in this space, and that is the launch or approval of U.S. ETFs. It's probably going to be inevitable. And until they are done and widely disseminated, the market, certainly Bitcoin, should have a propensity to keep on this trajectory, which I think is towards $100,000 this year.
Mike, Buffett did say probably rat poison squared. So he did leave the door open a little bit.
Yes, well, I definitely give him credit for that. I'm kidding. Well, I'm a big fan of, we all are Warren Buffett, but the key difference is this is part of the major shift in human nature with old versus young. And it takes a major shift in human nature to understand, okay, this is not a tangible asset. It's digital, but where is the world going? It's digital. I mean, i.e. Netflix versus Blockbuster.
Yeah. Hey, Dave Wilson, end it with you. Very briefly, earnings to watch for this week. What are you watching?
Oh, well, I mean, you mentioned a third of the Dow companies reporting. Coca-Cola was out today. Shares really haven't done much, though, just up 0.1%. IBM after the close, and then J&J, Verizon, Intel, American Express. And also after the close tomorrow, not on the Dow, but certainly noteworthy, Netflix.
Oh, yeah. That's a fun one.
Yeah, we got to remember IBM after the close. I forgot there's some big ones. All right, let's get to the Business Week Bite of the Day, one number that tells us a lot. It is brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
Today's number is 64. People who fought off the COVID-19 virus will be reinfected in a new trial at Oxford. Researchers are looking for 64 healthy, previously infected volunteers from 18 to 30 years old to be studied under controlled quarantine conditions for at least 17 days. The data is going to help vaccine developers look at levels and types of immunity and how long protection persists. That's a big unknown right now. How long we will be how long vaccinations last, how long those antibodies last, and the research is happening.
Right, exactly. We already heard, was it the Pfizer CEO
last
week
Bula.
talking about another booster shot that we'll need maybe in 12 months for those who got the Pfizer vaccine. All right, let's get to world and national news. Over to Nancy Lyons we go in D.C. Hey, Nance.
Hey, Carol. The jury will soon begin deliberations in the trial of former Minneapolis police officer Derek Chauvin, charged in the death of George Floyd. During closing arguments, prosecutor Steve Schleicher said Floyd's final words were a plea for help from the officer. Please, I can't breathe.
The defendant did not help. He stayed on top of him, continued to push him down, to grind his knees, to twist his hand, to twist his fingers into the handcuffs that bound him, looking at him, staring down at times the horrified bystanders who had gathered and watched this unfold.
Schleicher says those actions warrant conviction, not just for manslaughter, but also on 2 counts of murder. The defense is now giving closing arguments and says prosecutors have failed to meet the burden of proof in the case beyond a reasonable doubt. Well, NASA has conducted its first flight on another planet.
Relief and elation at NASA after the mini-copter, all 4 pounds of it, rose 10 feet over the surface of Mars, hovered, then landed safely. Researchers say this opens the door for a new generation of space drones. As the U.S. and other nations prepare to return humans to the moon and eventually land on Mars, using drones to closely assess the surrounding landscape is critical. Researchers have 4 more flights planned. In Washington, I'm Amy Morris, Bloomberg Radio.
Russian opposition leader Alexei Navalny has been transferred to a prison hospital. He's been on a hunger strike. Some allies say he's near death. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic, the Monday edition of Bloomberg Business Week. A couple of COVID stories we want to bring to your attention. New York City's positive test rate for COVID-19 dipping below 5% for the first time in several months as daily vaccinations reached a record. This is according to New York City Mayor Bill de Blasio.
Yeah, the 5-day average for positive tests, it fell to 4.91%. That's as of Friday, below a key public health safety threshold that was established a year ago. On the same day, the city set a record for vaccinations with 106,528. So that brings the total to 5,746,378 doses to date. Yeah. Well, let's talk about this figure because this is an important one. Positivity rate is exactly what it sounds like. For everybody who is tested, this is the percentage of people whose tests come back positive.
Right.
So it's not necessarily how many people in the city have COVID. It's just people who are tested and then are positive.
Exactly. But it's been a key metric in trying to figure out kind of where we are. I'm just going to say I was looking at the city setting a record vaccinations, talking about that specifically. I got my second one Friday night.
I'm so happy.
It felt really great. And
How do you feel now?
I feel fine, and I was really fine over the weekend, a little tired, and I just took it easy, but I didn't feel any serious side effects. But I asked the individual who was giving me the vaccine, I said, so what's it been like? Has it been slowing down? Because I was thinking of the vaccine story that we talked about where vaccines are going unused in certain parts of the country and just kind of piling up. And he said, nope, we've been doing 1,000 a day, 7 days a week, starting at 7 in the morning till 7 o'clock at night. And he goes, it's been a steady flow.
It's great to hear. The city is starting to do walk-in availability for certain age groups. Now it's at 50 years and over. To try to get people who don't necessarily have the ability to make these appointments online or don't have the time to actually plan it out. So they can just go when it's available.
I do want to contrast it with something, though, because we are going to talk about this with Andy Brown of Bloomberg New Economy later, but global COVID cases did hit a weekly record despite vaccinations that are being rolled out around the world. It just shows us, and Andy's going to talk about this, the virus knows no borders.
Yeah, and look, the pandemic being over in the United States doesn't mean the pandemic is over. If we're not vaccinating the world, that matters. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks retreated from records as investors await the heart of earnings season, along with more economic data later in the week. Technology shares weighing on the S&P 500 index, with the S&P down 25 points now, a drop of 0.6%. The Dow is down 143 points, down 0.4%, while NASDAQ is tumbling 153, down 1.1%. 10-year yield 1.60%. We've got gold down $6 the ounce at $17.70, a drop there of 0.3%. West Texas Intermediate crude down 0.5%, $63.44 a barrel. After earnings, Coca-Cola shares lower a little change, down now by 2 cents, down less than 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So, listen, global COVID-19 cases, we just talked about, hitting a weekly record despite vaccine rollouts, right? So and that's topping about 5.2 million worldwide, those cases. We talk about vaccine hesitancy. There's a lot of things going on. And in particular, we are seeing, Tim, a lot of individuals, institutions working with sectors and segments of the U.S. to encourage vaccine participation. And our next guest definitely has some thoughts on that.
Yeah, Rhett Buttle is the founder of Public-Private Strategies, also senior fellow at the Aspen Institute, joining us on the phone from Washington, D.C. Rhett, Carol and I talk a lot about how, well, when it comes to COVID, we talk a lot about everything when it comes to COVID, but two things that I've been focused on as the U.S. vaccination effort has done really well. One is, how do we get, I keep referring to it as like the last mile, right? How do we get those people vaccinated who aren't being proactive about making appointments? And then also, what does it look like if we do have to get that booster shot? And this is the type of thing that we have to do every single year to prevent little outbreaks of the pandemic. So what is the right way for companies to approach this? Like, is this the flu shot like we get at work now?
Well, first of all, thank you so much for having me. And you're right, employers of all sizes have a role to play. We've specifically launched an effort focused on small businesses. And what we know from research is that, as you're talking about vaccine hesitant populations, messengers are everything. And so really, this is about meeting the consumer where it's at. In this case, it's about meeting each American where it's at. And we really think that employers, and in particular small businesses, have a role as a trusted institution in really encouraging people to get their COVID vaccine.
Well, tell us specifically about this initiative that you got underway, Rhett, the Reimagine Main Street initiative. What is it about? What are you looking to do? And what is it that's holding small businesses, particularly those maybe of color, of minority small businesses that maybe are preventing workers from getting the vaccine? Is it that they don't want to, or that it's just difficult for them to get the time to do it?
Absolutely. So we launched this initiative about a year ago when COVID-19 broke out to really make sure that small business owners, and in particular business owners of color, were at the center of our recovery. And so we've been working on research and policymaker advocacy. And now we've added a new leg to this campaign, which is really using small employers as a vehicle to get information out. Because small business owners are some of the most trusted institutions in our country. They're ranked number 2 according to Gallup. And quite frankly, the people who work for them trust them. And as you talked about, particularly in communities of color, a lot of folks are unsure about the vaccine. Some of that is because of deep racism in our country, and rightfully so. But we know just how important this vaccine is to not only our public health, but getting our economy open again. And it's not uncommon, right, to see employers. We've seen employers do unique stuff around the flu vaccine. In this case, for this first-time effort, it's really important to get these Main Street businesses engaged in these communities. Their workers turn to them, their communities look and see, what small business owners have to say about issues. And so we think they have a unique perch. And so in addition to providing education tools and resources, we've launched a Vaccine Leaders Pledge program for business owners to sign up. And we've curtailed information and resources to small business owners who want to talk to their employees and their communities about why this is important to not only getting public health back, but quite frankly, to getting our economy fully reopened.
I think it's one thing for people to trust their employer and understand that the vaccine is the right thing to do, but it's an entirely different thing to get on their phone, schedule that appointment at a time that they're not at work, and then also schedule that follow-up appointment as well. So how do you make it as easy as possible for somebody who hasn't been able to get a vaccine yet to do it?
Well, and I think that's where we see, this role of the employer coming in. And so we've seen employers doing really neat things. There's an amazing hair salon in Ohio who's working to actually book their customers for vaccine appointments when they come into the salon. That's one example of an above and beyond effort. But as an employer, it's also really important to be able to create that space for your employees to get educated, but also letting them know that maybe you're going to give them paid time off when they go in to get their vaccine and give them paid time off to recover so they don't feel the pressure of necessarily having to miss work and the burden that comes with that as an extra incentive to make sure that they get vaccinated.
Hey, Rhett, how big of a problem do you think it is among the small business community in terms of their workers or their business owners not going out and getting the vaccine specifically? Or is it more that you're just thinking about the communities around them?
I think it's two reasons. One is because of this trusted status that I'm talking about. We're living in an interesting time where a lot of people don't necessarily trust media, they don't trust the government, but they do trust their employers. In particular, they trust small business, so we think they're important. But also, half of Americans work for small business owners, and actually about 100 million Americans' financial lives in some cases depend on a small business. So they're a really important channel for getting information out and touching individuals. And so that's really why we've chosen this channel in particular as a way to get information out.
How do you think about areas outside of the U.S.? That was the other thing that Carol and I talk about all the time, is how the pandemic is. Look, we have not done a great job in the United States overall, but when it comes to vaccinations, we are certainly leading the world right now. But it's not the same story in the vast majority of the world.
Yeah, before I, worked outside government, I actually had the privilege of serving at the Department of Health and Human Services, and I did a lot of work on Ebola. And, early on, one of the reasons we responded so quickly to the Ebola problem in Africa is because we knew that our world is interconnected, right? And that is so important for especially business today. And so, this is a global issue. And, while we're making great progress here in the United States, I'm encouraged by the Biden administration's efforts to rejoin COVAX, to rejoin the World Health Organization, because this is really a global problem and it doesn't stop. A virus like this sees no borders, no boundaries, right? And so we really have to think about a global approach. And so right now we're focused on, getting everyone vaccinated at home. And then at the same time, because we can walk and, chew bubble gum at the same time, we're working on building our credibility back across the world to help defeat the virus as well.
Well, listen, it's a reminder of small businesses. They play a crucial role in communities. It's where conversations happen. And you do think about, especially something like the vaccine, getting a message out, how productive that can be, those small business owners in particular. Rhett Buttle, thank you so much. Founder of Public-Private Strategies. It's a consulting firm. He's also senior fellow at the Aspen Institute. Rhett joining us on the phone from Washington, D.C. Coming up, we're going to talk about climate change, the U.S. stepping up once again on the global stage. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah, you're listening to Bloomberg Business Week on this Monday. Carol Master along with Tim Stanovic. And let's not forget, on your calendars, check it out, folks, because I think on Thursday we kick off a climate summit.
Yeah, all eyes are going to be on the Biden administration. The big question that the administration is struggling with is, in the eyes of foreign leaders, how can they trust the United States when we've waffled so much in the last 4 years when it comes to how we're thinking about climate?
Take a position and stick to it.
Yeah.
Is basically what they're going to say. All right, we're going to get to that in just a moment. Let's get back, though, to Charlie Pellet. Check on that trading day. Hey, Charlie.
Well, hello there. We're lower across the board right now. Carol Massar with the S&P down 22, down 0.5%. The Dow also retreating from a record, down 126 now, down 0.4%. NASDAQ is slumping 142, down by 1%. Investors are awaiting the heart of earnings season and more economic data later in the week. We've got the Russell 2000 slumping 1.4% right now. Dow Transport's down 0.8%. NASDAQ 100 index is down by 1%. Right now, the 10-year yield 1.60%. Gold is down 5.90 the ounce, down 0.3% to 17.70. And West Texas Intermediate crude up 0.4%, 63.38 a barrel. New York City's positive test rate for COVID-19 dipped below 5% for the first time in several months as daily vaccinations reached a record. Mayor Bill de Blasio says the 7-day average for positive tests fell to 4.91% as of Friday. That is below a key public health safety threshold established a year ago. But global COVID-19 cases did hit a weekly record despite those vaccine rollouts, topping 5.2 million worldwide. Dr. Joshua Sharfstein is vice dean at the Johns Hopkins Bloomberg School of Public Health, and he says we cannot let our guard down.
Don't declare victory too early. I mean, it's still the same message. This is a difficult situation, and people who are not vaccinated and are going out to places with poor ventilation are very much at risk.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we follow, Pfizer up 0.7%, BioNTech lower by 1.2%. That's the ADRs. AstraZeneca's ADRs up 1.6%. Moderna is slumping 4.5%, and Johnson & Johnson up by 0.2%. Recapping a down Monday, S&P dropping 24 points now, lower by 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. Charlie Pellet, thank you so much. Well, this week, as we mentioned on the calendar, an International Climate Summit gets underway. That'll happen, Tim, on Thursday. It has not been a straight line when it comes to climate change policy and the U.S.'s position on it. Not even close.
Yeah, not even close. I mean, that's what the United States is struggling with right now, how the world views it and how other world leaders view it. And I think a lot's going to come to head on Thursday. Will Wade is the Power and Renewable Energy Editor at Bloomberg News, joins us on the phone from our New York City bureau. Will, it's great to have you on the show. I want to talk a little bit about what the United States needs to do in order to convince allies that it's serious about the climate, especially when you come, and by you I mean when Joe Biden comes within his first 100 days after the Trump administration, did so much to pull out of the Paris Climate Agreement and more.
Oh, well, thanks for having me. The first thing that we're going to see this week is what's called a nationally determined contribution, which is kind of wonky, I know. It's required under the Paris Agreement, which Biden announced that he was rejoining on his first day in office. And what that basically means is every country that's participating in the Paris Agreement has to come up with its own pledge on how much it's going to cut emissions by, usually from a certain baseline year. So back in 2015, Obama said that the U.S. would cut emissions by 26 to 28% from 2005 by 2025. So since then, most of the other countries have significantly increased their pledges to reduce emissions. And of course, we haven't done anything because Trump pulled us out of the Paris Agreement. So what happens now is Biden has to come up with a new one, and he can't just say we're going to do what we said we're going to do before. He's got to do something a whole lot better than that. And the rest of the world is watching to see if we will indeed do something much bigger than what we said we'd do before.
Right, exactly. And they're probably wondering, too, which United States is going to show up. Is it going to be the one that's going to stick to its promises when it comes to climate change, or could we in a few years get a whole new administration that goes the other way? I mean, there's just so much, though, a president can do, right? Because another president can come along in a couple of years and undo it.
Yeah, there's a lot of concern about that. I think the rest of the world is sort of watching Biden. I mean, it's very early days for his administration. So first they want to see what he's going to try to do. And, 3.5 years from now, when we start getting ready for the next election, I guess they'll have to take that when it comes. But at least for now, they'll see what new President Biden is trying to do.
Hey, where do companies come into this conversation, especially, specifically U.S. companies, and what role do they have in shaping this conversation? Because, politicians come and go, but these companies are here for longer periods of time.
Yeah, that's a really good question, because the government sets a target, says the entire U.S. economy emissions will go down by a certain amount, and there's only so much the government can do. The government only controls certain things. Even after Trump pulled us out of the Paris Agreement, a lot of states, a lot of cities, a lot of businesses said, well, we still believe it's important, so we're going to cut our own emissions by as much as we can. So even without the federal government helping, over the past 4 years, emissions did come down, and we're kind of close to on track to meeting that initial 2015 pledge. Most businesses are strongly behind climate actions and cutting emissions.
Right, and if you're a global player, you might have to deal with policies or rules and regulations that are maybe tougher over in Europe. And as a global entity, your tendency is to kind of be like, let's just across the board, let's do where the stringent, the most stringent regulations are, because in anticipation that they could be coming in other parts of the world. Is that fair to say?
Really hard for a huge corporation to have different policies for different regions. It's a lot easier to just come up with one that will cover them for everything. You see that a lot with automakers that say, well, we can't make a different car for every country. We'll just do the one that meets California standards because they're the strongest in the U.S.
Exactly.
Hey, Will, very briefly, what are you watching for on Thursday? Only have about 20 seconds.
Well, we're going to see the new NDC either on Thursday or before that. They haven't told us when, and everyone's looking to see a number that starts with 5. They want to see at least 50% reduction commitment.
NDC, did you say?
I said NDC. That's the nationally determined contribution.
We want to learn something, Will. We love when you do that. Will Wade, thank you so much. Power and Renewable Energy Editor at Bloomberg News on the phone from our bureau in New York City. I've got to say, too, there's some great reporting by Bloomberg City Lab on the importance of green space in urban cities, that cities, are going to need to be able to do this in order to, open up land so that the environment is okay.
My friend is a teacher at a New York City school. It was designed after the last pandemic, and that's why it's actually in a good position. It's interesting.
See, and I do think about architecture and development, how it's changing. All right, let's get back to world and national news. Back on over to Nancy Lyons in our D.C. newsroom. Hey, Nance.
Hey, Carol. Closing arguments are underway in the trial of former Minneapolis police officer Derek Chauvin, charged in the death of George Floyd. Prosecutor Steve Schleicher says Officer Chauvin had to know he was squeezing the life out of Floyd.
For 9 minutes and 29 seconds, he begged, George Floyd begged until he could speak no more, and the defendant continued this assault.
Schleicher says Chauvin did it on purpose. Defense attorney Eric Nelson says Chauvin did as he was trained to do.
I submit to you that the state has failed to meet its burden of proof beyond a reasonable doubt.
If convicted of the top charge of second-degree unintentional murder, Chauvin could face a maximum prison sentence of 40 years. 26 years ago today, 168 people were killed at the Alfred P. Murrah Government Building in Oklahoma City in a domestic terrorism act. U.S. Attorney General Merrick Garland led the prosecution of Timothy McVeigh, who was convicted in that attack. During a remembrance ceremony today, Garland said domestic terrorism remains a real threat.
Although many years have passed, the terror perpetrated by people like Timothy McVeigh is still with us.
Garland says the Department of Justice is pouring its resources into stopping domestic violent extremists before they can attack. Well, the Supreme Court says it will not hear a case out of Pennsylvania related to the 2020 election. It's a case that lingered while similar election challenges had been rejected. The High Court today directed a lower court to dismiss the case as moot. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You know, this is something that we've talked about on air, Tim, with some of our reporters about, you know, what's going to be the comfort level that as we move potentially to a self-driving world, how comfortable will the world be with, as part of that process, we are going to see people get hit and people lose their lives? Because I don't know if we put this in that category, but I feel like we've got to get our head around it, or maybe we won't be comfortable with it. We're, of course, talking about a Tesla story, a Tesla electric car that, quote, no one appeared to be driving, crashing late Saturday in Texas, erupting into flames, killing the 2 passengers, according to local authorities. And I guess so far from early analysis is that one person was in the passenger seat.
In the front seat.
In the front seat, and then there was a person in the back seat.
Right, so authorities are saying that it appeared nobody was actually driving. The positions of the victim, statements, and other physical evidence suggest that, quote, no one was driving the vehicle at the time of impact. It is still under investigation. One thing about this is obviously a tragic story, Carol.
Totally.
They don't know whether the autopilot feature was engaged. It also took more than 30,000 gallons of water to extinguish the fire, which burned for 4 hours. It's a business story because it's affecting Tesla stock. The company has not immediately responded to a request for comment. Shares fell as much as 4.4% earlier in the day today, but as we heard from Dave a little earlier, they've since recovered a little bit.
And we know in the past that Tesla CEO Elon Musk has defended the safety record of his company's vehicles. This week, he shared a report on Twitter saying that a Tesla with autopilot engaged is now approaching a, quote, 10 times lower, end quote, chance of an accident than an average vehicle. Like anybody who's got a car with some of these safety, where basically the car is driving itself, especially, you know, you can see how it can prevent accidents.
Right, and look, it's designed for somebody to be in the driver's seat. That's the important thing to keep in mind.
Right.
It's not designed for somebody not to be sitting.
And Tesla has said that.
Yeah.
At this point, I think, you know, stay tuned for this, and we're going to actually talk about this a little bit more in just a moment with our Bloomberg News team, because this is certainly something we are all watching very, very closely. Tesla shares, by the way, down about 4.3% in today's trade, off its lows. This is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're looking at a down day for the U.S. stock market as investors await the heart of the earnings season, along with more economic data later in the week. Technology shares dragging down the S&P 500 index. Right now, the S&P lower by 23, a drop of about 0.6%. NASDAQ is down 157 points, down 1.1%. Dow Industrials down 133 points, a drop there of 0.4%. 10-year yield 1.59%. Gold is down 0.3%, $17.70 the ounce. And West Texas Intermediate crude down 0.3%, $63.33 a barrel. Bitcoin down now by 10% at 55,629. We've got Tesla shares, company we were just talking about, lower now by 4.1%. So it is a down day. 10-year yield 1.59%, and gold, as I mentioned, down 0.4%. A headline from the Bloomberg Professional Service. Sources say the owner of Parexel International Corp., which helps drug makers run clinical trials, is working with an advisor on a potential sale that could value the company at several $1 billion. One of the people says a private equity firm, Pamplona Capital Management, is also considering taking Parexel public. Again, we've got stocks trading lower after the bell. We will be hearing from UAL. That is the parent of United Airlines, United Airlines Holdings, lower now by 1%. We'll also be hearing from IBM down by 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Some biggies after the close. All right, Charlie, thank you so much. So, writing for Bloomberg Business Week this week, Bloomberg opinion columnist Liam Denning, who takes a look at the future of energy from really, Tim, a management perspective. It's a great business school case study. It's looking at Elon Musk, of course, the CEO of Tesla, and Darren Woods, his counterpart at ExxonMobil. And safe to say, I got to tell you, I had to actually look up the name of ExxonMobil CEO because I didn't remember that. That's who was running it.
Maybe he should be tweeting more about Dogecoin.
or maybe not. Or just worrying about the future of energy. Anyway, this story is the remarks for the upcoming issue of Bloomberg Business Week. And joining us with more, Bloomberg Business Week editor Joel Weber on the Access line in Brooklyn, and Bloomberg Opinion, energy, mining, and commodities columnist Liam Denning. He's on the phone in New York. Joel, let's start with you, though. I love this. It really is a case study of two very different CEOs.
Yeah, and I had the same reaction when I was reading it. It was like, Darren who? And for the most part, investors have kind of felt the same way, I think. But I think one of the reasons that we are really into this is like, look, like earnings season upon us, and Tesla versus Exxon. Can you imagine two different corporate stories or leadership styles? And what I thought Liam did a really good job of hitting on was for the most part, one is just really ran on faith, and obviously that's more Tesla, while Exxon has been known for this real doggedness on numbers, and yet one is having a completely different version of reality than the other over the past long haul, and this year to date, which I'm sure we'll talk about, has been a little bit different. But Liam, how did you ultimately settle on putting these two leaders in the spotlight as sort of opposite forces, if you will?
I think it's just because we're at a really interesting moment for both of them. So you remember last year, Exxon's market cap shot up by a factor of 7, went way past Exxon's. And, as you may recall, there were a flurry of stories about that and how it symbolized the transition from, the oil age to the electric age and that sort of thing. But I think it's interesting because the way I think about it is, if you go back a few years, Exxon was the most valuable company in the world. It could kind of do no wrong. And investors had this kind of rock-solid belief in it. And here we are, just a few short years later in early 2021. Exxon is, it's been through some troubling times. It's run pretty much the same as it always has been, but it's lost that kind of belief from investors, whereas Tesla, despite everything it does that you think would shake belief, just has this kind of fanatical devotion on the part of investors. So I just thought it was an interesting way of looking at these two companies at opposite ends of the energy business.
It's really interesting, and I thought, man, this would be great to just sit down with a bunch of people like we are doing now and just talk about it. You do wonder, because both, Liam, are optimistic long term, and how can that be possible? Can it be possible that they both have, at least in the somewhat longer term, optimistic futures, or is that impossible?
I think it's impossible. There is one viewpoint that says, well, look, the energy transition will take time, and both of these companies can certainly make money for some period. But I think when you look at their core belief systems, they're just very different. I mean, Bloomberg NEF, our own in-house forecasters, they're pretty bullish on electric vehicles, but even they see it as taking a little while, maybe into the middle of the 2030s, to see serious market penetration. Elon Musk sees it happening much quicker than that. You look at ExxonMobil, they're more in the it will take time camp. We can develop new businesses, that sort of thing. I just think the sheer aggressiveness of each view makes them incompatible. One of these is going to work out to be true, but not both.
It does seem like the money right now is on Tesla, though. It's hard to imagine a world where fossil fuels, and a company that really is focused on fossil fuels, ends up being the one that survives, right?
I think longer term, fossil fuels are going to peak and decline, absolutely. I think it's a question of degree. Exxon has suffered mainly because it made some really bad tactical errors, stretching all the way back to about a decade ago when it bought this very expensive gas business, where it ended up writing off quite a lot of it at the end of last year. And there have been other mistakes. I think where it gets a little unbelievable is if you look at Tesla. I mean, clearly there is a lot of money flowing into clean tech right now, and there is a bright future for that business. But you look at Tesla, it's made about $1 billion of profit over the last 6 quarters. It's valued at $700 billion. Has the market got a bit ahead of itself on Tesla? I would say yes.
Well, that kind of speaks to, how Exxon specifically has performed this year to date, Liam, and that number actually really jumped out to me. So talk about why an Exxon might be able to continue to perform in the shorter term, while as in the long run the market might be right to be bullish on Tesla.
Yeah, I think in the short term, what Exxon is doing, it's a couple of things. One is that it's just that the oil price has recovered a bit from the COVID pandemic, so that's kind of lifted all oil companies. I think the other thing is Exxon has, Exxon was kind of aloof for the longest time. I mean, I think I mentioned in the piece that Darren Woods made headlines just for showing up on an earnings call.
Ouch!
Right.
Burn.
And they've actually had to listen. They've actually had activists show up and had to engage with them, and so they've adjusted their stance. They've reined in spending. They've started acknowledging that there is actually an energy transition, and they're potentially going to start businesses that look at that. So they're coming back partly because the oil price is coming back, but partly because they seem to have acknowledged their past mistakes. With Tesla, there is the core story of the energy transition, and that's right, of course. But it's also a function of the fact that we are in a moment in markets where that kind of long-term vision thing is meeting, very low interest rates, and you do get some fantastic valuations.
Well, we're definitely at a point where there's disruption in this industry. There's still a lot of cars, though, on the road that are, gas guzzlers. And at the same time, we had the Tesla story over the weekend, with the car crash killing 2, no one appeared to be driving. And it's just a reminder that it's not also an easy or just path forward without some speed bumps along the way, certainly for something like Tesla. Joel Weber, Liam Denning, thank you so much. For those of you listening in New York, D.C., and San Francisco, we're going to come back on Business Week. If you're listening on Bloomberg 106.1 in Boston, Bay State Business, though, that is coming up next. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Monday, April 19th. The Dow, the S&P, and NASDAQ are all declining right now. Stocks pulling back from records as investors await the heart of the earnings season and more economic data later in the week. After the bell today, we will be hearing from IBM, down now by 0.2%. United Airlines Holdings, UAL, down now by 1.1%. Technology shares dragging down the S&P 500 index, which is on track for its biggest drop in almost 4 weeks. Right now, the S&P is down 23, a drop of 0.5%. Dow Industrials down 120, lower by 0.4%, and NASDAQ is down 150, a drop of 1.1%. The NASDAQ 100 index also down 1.1%, and the Russell 2000 is down 1.4%. 10-year yield 1.59%. Gold is down 0.3% at $17.71 the ounce, while crude oil is advancing by 0.3%. West Texas Intermediate crude right now $63.32 a barrel. As for the market backdrop, Victoria Fernandez is Chief Global Strategist at Crossmark Global Investments.
There are some warning signs that perhaps things are getting a little overheated, but you have to take a step back and look and say, wait a minute, we're on our third stimulus package, which is supporting the economy. We've got savings rates that are extremely high right now for the consumer. So even though we had really strong retail sales numbers that came out last week, the savings rate, most of that stimulus check money went into savings. So the consumer is set up for 2-3 quarters down the road to continue to be strong.
After earnings, Coca-Cola shares up 0.3%. Peloton Interactive plunging after regulators warn consumers to stop using the exercise equipment maker's Tread Plus machine if there are young children or pets at home. Peloton down 7.4%. I'm Charlie Pellet, and that's a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Well, the developed world, taking care of the developing world when it comes to COVID and vaccine distribution, that's something that just last month we talked about with Nobel laureate and Columbia University professor Joseph Stiglitz. Check it out.
The developing countries, particularly in emerging markets, are not on track to have the kind of light at the end of the tunnel that we're beginning to see in the United States. We're getting vaccinated, and there are many, many countries, as we document around the world, that have not had a single vaccine. They just can't get access.
It's a gap in terms of getting to that vaccine. We're certainly seeing that play out around the world. Writing about vaccine inequality in his weekly column, Bloomberg New Economy editorial director Andy Brown. Andy with us on the phone in New York City, at our bureau here in New York City, I should say. So Andy, come on in on this. This was something Joseph Stiglitz, Nobel laureate, very passionate about, a lot of other people, and you just put it so eloquently in your weekly column. Tell us about this.
Yeah, well, the head of the World Health Organization described this vaccine inequity as a catastrophic moral failure. And not just that, it makes absolutely no economic sense at all. The International Chamber of Commerce did a study which showed that vaccine nationalism, basically rich countries hogging all the vaccines, is going to cost the global economy something like $9.2 trillion, of which half is going to be borne by rich countries. They lose because, the emerging markets that are grappling with the virus aren't buying their advanced manufactured products like planes and cars, but also they can't supply manufacturing parts. And the crazy thing here is that funding these multilateral efforts to vaccinate emerging economies is going to cost a couple $2 billion, right? So, overall, in the big picture, a drop in the bucket.
Hey, Andy, talk a little bit about what this Bill Gates quote that you included. Quote, the self-interested thing and the altruistic thing, making sure poor nations have access to vaccines, are one and the same. Why do we have so much trouble seeing that?
It's a really good question. You know, I mean, of course, governments everywhere have an obligation to look after their own people. But you know, we've got to the situation now where in the U.S. and large parts of Europe, we're well on our way now to herd immunity, which is generally, you know, calculated as around about 70% of the population with some kind of immunity at best. At the end of this year, we're looking at no more than emerging economies having inoculated no more than about 25%, 1/4 of their population. And as Joe Stiglitz, you just heard him say, you know, there's a whole bunch of poor countries, a couple dozen of them, where they haven't even gotten started, you know. And I mean, and you think about this, there's a stockpile right now in the U.S. of 20 million of doses of AstraZeneca. Apparently, it's not even going to factor into Joe Biden's or the Biden administration's vaccine rollout. You know, 20 million vaccines could vaccinate the whole of Cameroon, you know, or Angola. I mean, it would seem to me to be such an easy win for advancing, particularly the United States right now, to just lead a global campaign to inoculate the world. I mean, of course, it would be morally the right thing to do. And, you know, as I say, I mean, it's just a no-brainer. From an economic perspective.
Well, you know, and in reading your column, Andy, the thing is, all right, if you don't have a moral compass and you don't realize that it's the right thing to do to take care of the developing world, you know, just from an economic sense, and you mentioned this stat at the top of our segment here that you say that the Chamber of Commerce, the International Chamber of Commerce, concluding an unequal allocation of injections, vaccine injections, could deprive the world economy of as much as $9.2 trillion. So even if you don't think it's the right thing to do, you've got to at some point logically understand that there is a huge economic cost, continued cost, if we don't get this right.
Yeah, and then the other tragedy is, you know, with this scare over blood clots arising from AstraZeneca and now J&J. You know, in America, it's basically a bit of a speed bump, right? I mean, J&J is about 5%, I think, of all the vaccines that are being sort of pushed into arms around the country. But this is in Africa, the news that J&J was being suspended in the U.S. was absolutely devastating. I mean, you know, there's already a huge amount of vaccine hesitancy in Africa for all kinds of complicated reasons, you know, partly because a lot of people in Africa don't believe that Western pharmaceutical companies have their own best interests at heart. And, you know, in country after country, you're seeing that this news is now sort of, you know, health authorities have been persuading populations you've got to get vaccinated, and this has just set these efforts, you know, all the way back to square one.
So, Andy, how do you envision this ending? Do we get to a point where the entire world gets inoculated and in a reasonable time frame, or do we have pockets of areas of the world, like the United States, that are somewhat vaccinated, even though, as you point out, we live in a world with porous borders, and that kind of doesn't really matter?
Well, I hope not, because, you know, the old cliche, until everybody is safe, nobody is safe. And you know, there's a very realistic scenario where the emerging economies don't get vaccinated. You're going to start to get, of course, that offers an opportunity for variants to take hold, to overwhelm the existing vaccines. You know, and then you'll see the pandemic roaring back, and of course, then we'll be back again in another economic crisis. I mean, hence Bill Gates' contention that the self-interested thing and the altruistic thing are one and the same.
Yeah, and you know, listen, we talked so much about the importance of AstraZeneca's vaccine, J&J's vaccine, and really in being able to inoculate the world, and that has definitely been a major, major setback. Andy, thank you so much. Andy Brown, he's editorial director at Bloomberg New Economy, on the phone in our New York City bureau, but this is going to be a big thing. I mean, Joseph Stiglitz and many others, as Andy referenced, have talked about the importance that the virus knows no borders, and if we don't take care of the world at large, that's going to be a problem, and it's going to make COVID stay with us much longer.
Not only will it make COVID stay with us, a lot more lives will be lost, which is incredibly unfortunate. And what we see also is this uneven recovery around the world, where we won't get fully back to normal if there are areas of the world where there could be mutations forming, right?
Right, exactly. All right, well, certainly something we'll continue to watch. Check out Andy's columns and check out at New Econ Forum. This is Bloomberg Radio. Let's get a check on all the national news. Nancy Lyons over in D.C. Hey, Nance.
Hey, Carol. Well, things are about to get a whole lot easier. That's the word from White House COVID advisor Andy Slavitt now that vaccine eligibility extends to all people over the age of 16.
The lack of supply, the shortage of locations, the confusing rules are all in the past.
Slavitt says 50% of adults in the country have received at least one shot, although CDC Director Rochelle Walensky is still concerned about the rise in new cases with now more than 67,000 a day. President Biden is meeting with a bipartisan group of lawmakers this afternoon trying to reach some sort of consensus on his $2.2 trillion infrastructure and tax plan.
I am prepared to compromise, prepared to see what we can do and what we can get together on.
Biden says there are still a lot of needs. Former advisor to President Obama, Valerie Jarrett, tells Bloomberg the Republicans have offered very little on their end.
The ball is in their court now to come back with what they think is viable, but what he doesn't want to do is do just a modest amount of improvement that is not going to actually move the needle in terms of our global positioning and in terms of creating jobs that the American people so desperately need.
Jarrett says Biden is winning over Republican voters with his infrastructure plan. Jurors have been listening to closing arguments today in the trial of former Minneapolis police officer Derek Chauvin, charged with the death of George Floyd. Defense attorney Eric Nelson says Floyd's drug use, heart problems, and carbon monoxide that he was exposed to all constitute reasonable doubt. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, everyone. Not American football. We're talking about European football. We're talking about soccer specifically. WOA, one of our most read stories. It was the most read on the Bloomberg for a big chunk of our day. JP Morgan Chase bankrolling the biggest upheaval of European soccer since the 1950s in a $4.8 billion bet that has drawn in a lot of criticism from fans, domestic leagues, and politicians. But they are basically JP Morgan underwriting this investment.
Yeah, it's Super League. 6 teams from England, 3 from Italy, and 3 from Spain have signed up so far to play each other midweek. In the new league, this is a direct challenge to the prestigious, okay, I'm going to get this wrong, and I'm going to show myself that I'm not a... UEFA, thank you.
You're welcome. Thank you, Ari, our producer.
Thank you, Ari. UEFA Champions League, alongside 15 permanent teams, another 5 teams will qualify to take part each year.
Right, and then you've got UEFA, right, as we said...
Yeah.
Talking with Centricus Asset Management over a $7.2 billion financing package to overhaul its flagship soccer tournament and stop plans for that new breakaway Super League, according to people in the know. Listen, we talk about so many different industries and areas of our life being disrupted, and this is sports continuing to be disrupted. We've seen that over the last couple of years as streaming is taking over a bigger role in broadcasting, or broadcasting, quote unquote, live events in particular. But this is the financial world getting involved, and the teams then having more control over what happens.
And you say streaming and media. A big part of this is, of course, media rights. There is a lot of money there. Yeah, Alex Webb from Bloomberg Opinion was on Quick Take earlier today.
What did he say about it?
He joined us from London. I asked him, Alex, what's so bad about this? Because it sounds like the best, and again, I'm speaking from an American perspective, and I don't follow soccer at all, or football. What's so bad about this, having the best teams play each other? And he said, that is such an American question.
Right.
Yeah, and it's like...
What's so bad about having all the teams play one another?
Yeah, exactly.
Because that's a big part of this.
But Alex has a great column out. I encourage everyone to check it out. It's about how this is actually in itself anti-competitive. And he makes some really good points.
All right, we're going to have to stay tuned, folks. We're going to talk about this a little bit later on when we go beyond the bell. This is Bloomberg Radio.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a headline from the Bloomberg Professional Service. The Biden administration is considering a rule to cut nicotine in cigarettes. That report from Dow Jones. But again, the Biden administration said to be considering a rule to cut nicotine in cigarettes. It is a down day across the board for the U.S. stock market, retreating from records. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
Good afternoon, Charlie. That's right. U.S. stocks in the red today with the Dow currently down 145 points. S&P's dropped 26. NASDAQ is lower by 160. The U.S. 10-year yield at 1.6%. Gold is down 5, and transports dropped 122. Only real estate was in the green among the main 11 SB sectors, and consumer, discretionary, and tech were under pressure. Leaders to the upside in the Dow, Goldman Sachs and Walgreens, while Intel and Boeing led to the downside. After earnings, Coca-Cola was little changed. And in other news, BMW said preliminary figures for Q1 exceeded market views, and Senator Hawley offered a bill to break up the big tech companies. In deal news, NVIDIA fell as the UK intervened on the $40 billion ARM deal. And wrapping things up, IBM reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie, you've been talking about this stock. Tim and I have as well. It was one of the high flyers, certainly, of 2020, a different tone this year, and in particular today, down about 7.2%. We're talking about Peloton. The stock selling off, Tim, after U.S. regulators warned consumers to stop using the exercise equipment maker's Tread Plus machine if there are young children or pets at home.
Amin Benside is technology and media analyst at Bloomberg Intelligence and joins us on the phone from New York City. Amin, thanks for joining us about this. You have a reaction to this latest news from Peloton, essentially saying that the regulator warning on the Tread Plus, that's this machine that Carol was talking about, may not actually hurt the company's growth. Why not?
Thanks for having me. Yes, I mean, when we look at the hardware mix that Peloton has, over 90% of sales are still the bike, not so much the treadmill or the treadmill plus. So in the very near term, it doesn't look to us like this will have an impact. But on the other side, when we look at the litigation standpoint, our litigation analyst, Holly Froome, actually put a note this morning discussing how an involuntary recall for the Tread Plus product is unlikely. So the regulators, at this point of time, it's unlikely for them to force Peloton to stop, selling those products. So that's why we think for the near term, the impact could be minimal.
What about, though, on the brand? How much of this is important in terms of how they react to this particular thing and this particular problem or potential problem? I mean, it's obviously a problem if it's happening, right? But I do wonder how the company addresses it, how that could ultimately affect their future consumer base or future growth.
Absolutely. That's a good question because their focus for this year was also the treadmill. Because when you look at their marketing spend in the last 2 years, was mostly for the bike. But they discussed, on their earnings calls, how the treadmill, they're going to shift a lot of the marketing to the treadmill to boost sales for the product. And they also have the new lower price treadmill coming up in May. So yes, I agree that for the image of the brand, there could be an impact if this incidents keep happening and more regulators, join and warn about the product. But on the other hand, what the company is doing, to answer the second part of your question, they announced they're also updating their software to make it a little bit harder for anyone who's not supposed to use the treadmill to use the treadmill. Basically, either have a passcode or something for that sort, to improve safety for the product.
Do you see that being the solution here? Is it as simple as that? Is it an update to the hardware, or is this the type of thing that the company could get to the point where they are actually asking people to return this piece of equipment, which is incredibly hefty?
Yes, I mean, it's still unclear at this stage because we still are not clear on, is this a Peloton specific issue, or is this an overall treadmill? Because as you know, treadmills are dangerous for children and pets, so it's not something that I think, in my opinion, is Peloton specific. But if the regulators find that there is something in the hardware that make it Peloton specific, yes, it could be a risk. But to answer your question about is this enough from the software standpoint, again, if it's overall a treadmill risk, I think yes, could be enough. But if more concerns keep happening in the future, I don't know if a recall is even a possibility. And the company says they're not recalling or stopping sales for that product.
Well, I mean, like one thing I thought was interesting, I have a Peloton bike, and you've got to log in. And of course, a bike is not a treadmill. They're two different things. But I'm trying to understand, I think if you have everything turned off, unless you have a kid logging in, like you can't necessarily get things going. Again, I don't have the treadmill, so I don't know logistically if you can just hit a power on button and it's on, or if you just unplug it when you're done, do you kind of do away with the problem? I mean, treadmills have been around for a long time. Has this been a chronic consumer problem or consumer, I'm thinking of Consumer Reports, have they reported on things like this in the past with other treadmills, or like you said, is this something Peloton specific?
Yeah, I mean, so for the first part of your question, I think yes, that's what the regulators are also suggesting. Just unplug it or have it in a different room. That stops the problem. I mean, obviously, but there is no passcode there. You still have to the login is automatic if you have your passwords there. I would assume, because I had a bike there also, so I remember it was just just like one button and sign up. But maybe people leave it on and they go and come back. That's the risk. But I agree with this. If you unplug it or have more security measures, that could be enough. We're not sure. Yeah. The second part of your question for the recalls, the note was put up, but again, our litigation analysts, they showed that there were 80 recalls since 2000 about the exercise equipment, so they are relatively rare in this industry. So, unless we see significant amount of these incidents happening from Peloton specific, it doesn't look like it's something, that happens often.
I mean, very briefly, we only have 15 seconds left. Other types of hardware that you expect Peloton has in its pipeline right now?
Strength. Their focus is strength. When you look at strength very quickly, 3% of their workouts were strength. Wow. Now it's 13% as of last year and growing. So that is, that is their focus.
So that's like a tonal type of machine.
Tonal, or like maybe even a rower at high intensity, or anything focused in strength.
Okay. Listen, that's it. They're finding different revenue streams. That's what's pretty remarkable, that they pivoted off the bike into other things. Aman, thank you so much. Aman Benside, he's Bloomberg Intelligence Technology Analyst, joining us on the phone in New York City. As we mentioned, Peloton shares just down about 7.2% as we speak. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed, folks. Just about 29 minutes left in today's trading session. But before we get to the close, we've got to get to the chart of the day.
The chart of the day and the song of the day.
Yep, good stuff. Dave Wilson coming your way in just a moment. First up, though, let's get back to Charlie Pellet. There is a lot going on here, Charlie.
Indeed, we've got earnings after the bell. A lot of people waiting to see how the earnings season shakes out. And after the bell, we'll be hearing from IBM, down now by 0.5%. We'll also be hearing from United Airlines Holdings, UAL, down now by 1.4%. Bottom line here, we've got a down day after records as investors await the heart of the earnings season, along with more economic data later in the week. Tech shares dragging down the S&P 500 index, small caps underperforming, with about 80% of the stocks in the Russell 2000 declining. Let's begin there in terms of the indexes and averages. Russell 2000 down now by 1.5%. S&P down 31, a drop of 0.7%. The Dow down 178, down 0.5. NASDAQ down 174, a drop of 1.2%. NASDAQ 100 index down by 1.3%. 10-year yield now 1.60%. Gold is down 0.3 at $17.70 the ounce. And West Texas Intermediate crude up by 0.4%, $63.37 a barrel. Mayor de Blasio says New York City's positive test rate for COVID-19 dipped below 5% for the first time in several months as daily vaccinations reached a record. The 7-day average of positive tests fell to 4.91% as of Friday, below a key public health safety threshold established a year ago. Global COVID-19 cases, however, have hit a weekly record despite vaccine rollouts, topping 5.2 million worldwide. Dr. Joshua Sharfstein is Vice Dean of the Johns Hopkins Bloomberg School of Public Health, and he told us this morning he is concerned about variants, and it is just too early to get complacent.
I think if it were just a case of mild infections and people not getting hospitalized, then we'd be in a different world. That is not the world we're in. These variants are more lethal than the other ones. Younger people are getting sick. And I mean, again, I'm not trying to say everybody has to, completely hunker down, but we have to find that middle gear still as the vaccination numbers increase.
And the Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine stocks that we follow, Pfizer up 0.6%. Its German partner BioNTech, the ADR is down 2%. ADRs of AstraZeneca up 1.6%. Moderna is down 5.1%. Johnson & Johnson up by 0.2%. Apple will let the social media app Parler back on the App Store. Apple shares up now, little changed, up by less than 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is
Little Google cheat though, but I wasn't. I couldn't quite pick up on it. But yeah, that's a great one. That's going back, right?
Absolutely.
60s, 70s. Yeah. Right.
So you haven't gotten Shazam working for you yet?
I feel like that's like totally giving up. At least I try a little bit.
I feel like it would have to be so quick. You'd need like a 5G phone. There's a tech angle to this.
Ari's going to be like, who's doing our YouTube show. He's going to be like, why are you holding your phone up?
Can you not hold that phone up?
Could you not do that? All right, so get to the chart of the day. I'm thinking it has to do with a spell of some sort.
Yeah, you could say that. Over the years, there's this idea called the index effect that's developed. If a company goes into a prominent stock index, think of the S&P 500, that investors are going to flock to it to some extent. Certainly the managers of funds that track the index do. So And I cover smaller companies on a daily basis. I have this small cap report I do here on Bloomberg Radio just after 11 a.m. New York time.
I love that, actually.
Yeah, absolutely. But, so I see this. And a lot of times, you'll see, the best and the worst performing stocks. And the best performers will include companies that are going into the S&P Small Cap 600, which you don't necessarily think of because, you're talking about a lot less money that's invested in index-linked funds. So you figure, the real sort of movement would be in companies coming into the S&P 500. But, this year it's been really noticeable. There was one on Friday that was named to the index. It was actually late Thursday, but the reaction was on Friday. It was a paper producer. Domtar was up about 5% on the day. That was actually the smallest gain this year for any company on its first day of trading after being selected for the small cap 600. And we're talking about 13 stocks in all. They've had an average advance of 11%. So you look at numbers like that, I mean, it's clear that the index effect is alive and well, even in the smaller companies, let alone the larger ones. So it's just sort of an interesting comparison. And if you want to see how the numbers look and you haven't already had a chance to view the chart, well, send me an email. I'll get it to you along with the explanation that goes with it and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
It's like winning the golden ticket, right? It's like, wait a minute, I'm in the index now?
Yeah, but I think there is some sort of truth to this, right, Dave? Like, there's a reason the stock goes up, not just because of excitement, right? It's because it's actually going into an index and people buy the index.
Recognition, right?
But people buy the index, and if somebody buys the index that day that it goes in, then the stock will, as a function of being in the index, actually get bought, right?
Yeah, I mean, the real question is whether the effect is in any sense exaggerated because people know everything you just said, Tim, and they want to get in front of it.
Yeah.
In other words, they want to beat the index fund managers to the punch to some extent. That's always the challenge to try and pick out when you see numbers like this is, to what extent is it what you might call a fundamental move with money flowing in from the index funds, and to what extent is it people kind of gaming the system because they know how it works.
Yeah, exactly. Well, good song. Credence. You can always take a little bit of Credence. It's a good way to get into a Monday or get through a Monday.
I even knew the what that was called.
Did you?
Well, it's like the first. I'm guessing it's "I'll Put a Spell on You."
Oh, right.
Yeah.
Did you know it was Credence? Did you know it?
No, I didn't know it was Credence.
Good stuff, though, Dave. Did you have a good weekend, Dave Wilson?
I did, thanks. My wife and I had met with some friends in New York and had brunch.
Oh, that's awesome.
It was more than 3.5 hours in an outdoor cafe.
That's great.
It was great.
Also great, always, is your stock of the day. What do we have coming up, and where can we find it?
Well, it's going to be a company called Haemonetics, which has suffered its biggest loss ever going back 30 years since they've been public. They do blood plasma collection equipment. And one of their biggest customers, Australia's CSL, isn't renewing after the current agreement expires in the middle of next year.
Okay, 4:15 Wall Street Time on Facebook, LinkedIn, and Twitter. Thanks, Dave Wilson. Let's get to a check of world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. In closing arguments, the defense has been reminding jurors that former Minneapolis police officer Derek Chauvin is presumed innocent in the death of George Floyd. And attorney Eric Nelson has tried to discredit the danger of Floyd being held in the prone position.
Consider just the basic prone position. People sleep in the prone position. People suntan in the prone position. People get massages in the prone position.
Nelson says his client did not use extreme force, but prosecutors say it is clear that what Chauvin did was assault, not policing.
What the defendant did here was a straight up felony assault. This was not policing. It was unnecessary. It was gratuitous. It was disproportionate. And he did it on purpose.
Prosecutor Steve Schleicher told jurors that Chauvin showed no compassion on the day of Floyd's death. As of today, all Americans 16 and older are eligible to receive the COVID-19 vaccine, and health officials are pushing people to do it since the vaccine is proving to be extremely effective.
Only a small number of people have tested positive for COVID-19 among those vaccinated, according to Dr. Rochelle Walensky, director of the Centers for Disease Control.
Out of more than 84 million people who are fully vaccinated,
We have only received reports of less than 6,000 breakthrough cases. Approximately 30% had no symptoms at all. These vaccines are working.
Dr. Walensky said there have been a handful of additional side effects reported since the Johnson & Johnson vaccine was paused.
That's Irv Chapman reporting. Global News 24 hours a day.
All right, got it, Nance. Thank you so much, Nancy Lyons there. Hey, a story that popped up on our radar, especially for we New Yorkers, and this is by our own Michelle Kasky of Bloomberg News. Talks about the New York MTA giving new bondholders haven from subway ridership drop. Listen, we know, I haven't been on a New York subway in over a year, and we know ridership is down a lot, and I think the anticipation is that even after COVID, that ridership will be down.
Right. By one estimate, 1/5 of those who used to ride the MTA, subway, buses, commuter trains every day are unlikely to come back even after the pandemic because of remote work. However, that won't be a major risk for the buyers of $1.3 billion of bonds that the MTA is selling this week.
Yeah, here's how it works. So the long-term debt will be the agency's first ever that's repaid with the revenue it receives from a payroll tax imposed on employers in New York City and surrounding counties. And that essentially insulates investors from a potential decline in toll and fare receipts, which we know has been happening and is expected to continue post-pandemic. Giving the new bonds credit ratings are as much as 6 steps higher than the agency's debt backed by the revenue it receives from riders. That's huge.
It's huge. And what it does essentially is make investors less concerned, or the idea is that they'll be less concerned. And indeed, credit ratings agencies are saying that they're less concerned because it's insulated from a drop in ridership. So even if the fares don't come back, the bondholders, according to this, will not be left holding the bag.
Right. And it also means that the rates on it are kept lower.
Right.
And that's really key because that's the ongoing cost going forward. So listen, we've talked a lot about the impact on cities specifically, lower tax revenue and so on. And so we do wonder how they're going to work things out. And this is one way.
I got to tell you, though, as somebody who has been lucky enough to drive in to work each and every day for the last year, most of the last year, I am so excited to get back on the subway. It's so much quicker to get everywhere than driving. You don't have to worry about parking. You don't have to worry about being stuck in traffic. The subway is fantastic. I can't wait to get back on
It's a pretty amazing system. And I think about like when the UN's going on, like you have even CEOs saying, I'm getting on a subway because it's quicker going across town. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell on this Monday, April 19th. Stocks lower across the board. In fact, we are close to session lows on the S&P, down 27 points now, a drop of about 0.6%. The Dow is down 150, lower by 0.4. NASDAQ down 163, down 1.2%. NASDAQ 100 index down 1.1%, and the Russell 2000 down 1.5%. Stocks retreated from records as investors await the heart of the earnings season, along with more economic data later in the week. 10-year yield now 1.59%. Gold is down 5 points, a drop of 0.3%. Gold down $5, I should say, at $17.70 the ounce. And West Texas Intermediate crude up 0.4%, 63.38 for a barrel of WTI. So again, the Dow, the S&P, NASDAQ all lower. After the bell, we will be hearing from IBM, shares down now by 0.3%, and United Airlines Holdings down now by 1.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 11 minutes left in today's trading session, getting ready to wrap up the Monday trade. Our guest in the drive to the close is Vance Howard, back with us, portfolio manager and CEO at Howard Capital Management, based in Georgia, and that's where we find him, Roswell, Georgia, to be exact. $3 billion in assets under management. Vance, nice to have you back here on Bloomberg Radio, on Bloomberg Business Week. When you look at the markets, you think they're a bit overbought. How overbought, and what does that mean in terms of a potential pullback?
Well, when we say overbought, Carol, let's be real clear. On a very, very short-term basis, meaning maybe 1 to 2 weeks, we do not see this market turning over at all. And, our proprietary indicator, the HCM buy line, is positive, so any pullback we see is a buying opportunity. But on a technical basis, just for a 1 or 2
So
week
you're a
pullback,
bull.
we're absolutely bullish. We're not only bullish, we're real bullish. We have been since the second week of April last year.
So what derails this bullishness? Because we spent a lot of time talking today about the unequal distribution of the vaccine and how just because a pandemic ends in the United States doesn't mean that it's necessarily ending around the world. And my concern there, apart from loss of life, is, of course, economic activity.
And so timely that you brought that up, Tim, because just crossing the Bloomberg terminal, the State Department took caution against travel to about 80% of countries. So, Vance, as Tim mentioned, a reminder that globally we're still in a tough place.
Globally, we are, but the vaccine's getting distributed very, very, very well in the United States. And by the way, that's a big testament to corporate America. They've been a big catalyst behind that. I think it's just been wonderful how fast they got the vaccine out and how fast they're getting it into people. I've already had one shot. I'll be getting my next shot next week. But and you see France over there is really struggling. I don't think that their corporate America has been quite as buttoned up or as strong as ours has, and I think that's why they've only got 3 or 4% of their people being vaccinated. So, the U.S. is just heads and tails above most other places.
But that creates some risks, and that creates some, what a CFO would say, tailwinds, right? Well, especially when it comes to the way that CFOs are thinking about the economy, because this is a global economy that we live in. It doesn't matter if we're vaccinated here in the U.S. if other countries aren't. They're not going to reopen.
And if our suppliers in the developing world can't provide components that we need for production, it just slows everybody down.
Well, there's no doubt it's going to be a slowdown, but we're opening up pretty quick. Even around the world, I think things are getting better. They're not getting worse. So, net, I think it's a positive. And let's face it, between China and the U.S., we're the 2 biggest economies out there, and it looks like China's opening up pretty good, too. I look at their GDP, it was through the roof.
So you're not worried at all. You're not, even though we did a story about global, COVID cases coming up. You think the U.S. alone, and I know you also talked about China specifically too, although I think China has had some trouble with vaccine rollout as well. You're not worried if China and the U.S. are going, you think everything's going to be fine?
I think we're going to work through it at a pretty good pace. I mean, do we have bumps in the road? Yes, but no matter whether we have a pandemic or not, there's always bumps in the road. There's always something, around the world that we can point a finger to and say, oh, that's the reason the market's not.
But there's
work.
bumps, and then there's another wave
work.
of COVID that causes shutdowns.
That could be a concern, but that's still, it's not to the point now I'd be too concerned about another wave, because even with the way, if we do have another wave, I don't think it's going to be such a shock factor as the second wave was, and I think that was a pretty big one. But yeah, we're bullish, and I would be buying into this, and I think 6 months, 12 months, 18 months, I think you'd be happy you did.
Really? So what are your own targets for the end of the year?
Well, we don't have any targets, Tim, to be quite candid, but we do run a proprietary indicator. The HCM byline is mathematically driven. It's all quantitatively driven. And I can tell you right now, as strong as the HCM byline is going back over 40 years, you got an 82% chance the market's going to be higher. So we know what the odds are. You got an 82% chance you take that trade.
So I'm going to ask a question. I bet I know the answer. Tesla down 4% today. You like this name. Are you buying on this dip? Or would you be?
We bought a whole bunch of Tesla about, I guess, 4 weeks ago. I think we're up about 18, 20% on that trade. We started buying into Tesla back then. Again, ask yourself, 12, 24 months from now, do you think Tesla's going to be higher? I think it is.
I don't know. I mean, there's a lot more new entrants when it comes to the EV market. We've done story after story every day that this year, 2021, is going to be, whether it's Volkswagen, whether it's Mercedes, whether it's BMW, whether, you talk about it, even, all along kind of the cost structure of cars, you see a lot new entries into the marketplace. You don't think that's going to give Tesla a run for their money?
It could. It very well could. But look at this, though. You're buying one other product that's a big part of Tesla, and that's a guy called Elon Musk. I mean, the guy made $1 billion with Bitcoin with Tesla. I mean, this guy's not sitting on his hands. He's probably one of the most brilliant innovators we have since Edison. So, and Steve Jobs. So, I mean, you're putting your money behind him. And I tell you, the guy's a young guy. He's a smart guy. I mean, think about what this guy can come up with in the next 12 to 24 months.
Does today's news concern you at all?
No, it doesn't concern me. I mean, this guy's already got a big foothold in the marketplace. He's going to drive traffic to Tesla. He's going to come up with something probably pretty interesting and innovative, probably in the near term.
Right, but just the fact that the idea that it could damage the brand, you're not concerned about that?
No, I'm not concerned about that.
Any other names that you're finding interesting? Like, we're going to have United after the closing bell today. We had Delta last week. I mean, listen, this is going to be potentially one of the big recovery stories, and we know this is a group that just got decimated. All of their business, or 90% of their business, shut down in 2020. What do you make of maybe the airlines? Is that an area where you would commit some new money? Or have they had their bounce back already?
No. I think they're going to move higher. Like I said, we're bullish. We think things are going to open up. We're not afraid of the world right now. We're watching a lot of great stocks that have been basing. Like, look at Amazon. Amazon's been basing for 9 months, and it's just very, very close to having a 52-week breakout, which is always a positive thing. Microsoft just broke out to a 52-week high. I mean, you're getting a lot of stocks that are starting to break out. That's telling you one thing: you don't trade with emotion. You have to trade math like we do. So sit around and worry about the virus all day. I don't know what's going to happen. Nobody does, but I can tell you the odds are very, very high mathematically. From the HCM byline, this market's going higher.
Well, there it is. You are definitely bullish. Okay, so I've asked you about if the virus could derail this. Is there anything else that you think could derail this? Because there's corporate taxes potentially that could go higher. We didn't see the market move significantly on that news a few weeks ago, which leads me to believe that either A, investors don't necessarily think it's going to happen, or B, it won't affect the company's bottom lines and earnings that much. Where do you fall when it comes to corporate taxes? Something to be concerned about?
But yeah, it is. There's two things that concern us. Now, these are things that could derail. Is higher taxes and dramatically more regulation. Those are the two factors that could throw a monkey wrench in this whole process. But what we're getting is a lot of talk out of Washington. I don't know how much of it's going to come reality, because there's a point out there that you got to step back as a legislature and say, man, if I crush the economy, I'm probably not going to keep my job and get reelected. So they're going to have to kind of walk a tightrope on what do you do with regulation and taxes to try to stay, keep it between the lines and not swerve off and wreck.
Hey, there's a lot of ETFs that you like. Just got about 45, 50 seconds left here. What's the play here for the ETF world for you?
Well, I was on CNBC the other day, and we were talking about...
Oh, my God, you're done. I can't even believe you did that. Really?
I didn't hear him. That's okay. I didn't hear what you said. It's
wow,
okay.
Vance.
Yeah, Vance, sorry, we had a technical issue.
You were doing so well, and then...
Well, whatever. We started buying DBY back in the first week, or the first week of April of last year, and it's been a great trade. But I was asked the question, though, by being interviewed. They said, well, don't you think it's top heavy? Don't you think it's too high? New highs become new highs, become new highs, become new highs. That's how things double. So nothing can double unless it's hitting a new high the whole way up. So when you look at the epicenter stocks, which DVY holds a whole bunch of high dividend epicenter stocks, there's just so many things that are working right now.
All right, we're going to leave it on that note. Vance Howard, thank you so much. Chief Executive Officer, Portfolio Manager, Howard Capital Management, $3 billion in assets under management, a definite bull there, and we still like him even though he mentioned a competitor. I mean, we like our competitors. I know a lot of people there. A lot of my friends are there, but still, know your audience. All right, folks, we've just got a few minutes left in today's trading session, and listen, a very different tone today, and we're seeing stocks really bouncing around their lows of the day. Still down about 24 points on the S&P, just a little bit lower. Dow down about 133 points, down 0.4%, Tim, and the NASDAQ down about 1%. All right, folks, it is time for the Beyond the Bell with our Bloomberg TV team, also live on TV, radio, and YouTube.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day, Romaine Bostick, Caroline Hyde, Taylor Riggs counting you down to the closing here to take us beyond the bell. Our global simulcast now in force. Carol Massar, Tim Stenovic joining us right now, bringing together our Bloomberg television, radio, and YouTube audiences worldwide. And quite a day here today. Here we're seeing stocks, of course, down here on the day. A lot of eyes on rates, a lot of eyes on the dollar, Carol.
Well, I'm pretty broad-based. I was just going to my Bloomberg to bring up the major industry groups in the S&P 500, Romaine, and it's pretty much across the board. Real estate, the only one, Tim, that we're seeing a little bit of gains. I think folks, again, are waiting. I want to hear more from earnings.
Yeah, taking a deeper dive into the S&P 500. And look, we are expecting IBM after the close. We're expecting United Airlines after the close. Eager to hear from them. Consumer discretionary, though, down 1.2%. Technology dragging down more than 0.9%, Taylor.
I love that you mentioned that, Tim, that we're waiting for the fundamentals and the earnings. We wait for guidance on United Airlines. Guidance is all over the place in terms of 2021. And yet we had another story on the terminal today talking about how 1/10, Caroline, of the S&P 500 is not really trading on fundamentals because it's so hard to read that guidance. It's trading on some of that high frequency, that quick alternative data like turnstiles, like TSA data. I mean, just unbelievable what investors really have to hold their hat on to glean guidance into the future.
And indeed, whether you're looking at technicals, not just fundamentals, not just news flow, but also just where we've been in terms of the lofty levels, about what, 96% of the S&P 500 now trading above their 200-day moving average. Is this just way too overbought territory, Romaine?
Yeah, well, the good news is the low of the day on the S&P 500 was 4150. The bad news is we're closing at 4162 and change here on the S&P 500. That puts us down about 0.5%. The NASDAQ composite 13912 as we wait, of course, for a final settlement of these trades. But that's going to amount to about a 1% decline here. Dow Jones Industrial Average down about 3%. And the big underperformer of the day, that has to be the Russell 2000, which looks like it's going to finish the day down about 1.4%.
Going to go back to what you guys were all just talking about, earnings. We're going to hear from a third of the Dow components. We need to hear from these CEOs what they see in terms of visibility, transparency. What's the outlook, Taylor, at this point? As you said, we've got to kind of glean information from a lot of different metrics to figure out what's next.
One thing I cannot figure out, which is why I love that we have our global audience here so someone can help me, is what is going on from a sector level. You have yields higher, and yet real estate is the only sector in the green. We're up 0.25%. Typically, that's not what you would see when yields are rising. But when yields are rising, one thing you can bet on is technology, the second worst performer of the group. You're off about 1%, Carol. So you are sort of seeing that risk-off tone. Technology not providing the safe haven today that sometimes it typically has in the last year.
All right. No risk off, though, for Hog. I love the ticker. I'm guessing maybe Romaine picked up a motorcycle, maybe Tim, maybe Caroline, maybe Taylor. Up almost 10% in today's session. This was an earnings beat in terms of estimates, and also looking at growth. They're talking about revenue. They're upping their estimates, 30 to 35% growth this year in terms of the U.S., so they're seeing a lot of North American demand. That was one of your gainers. GameStop, also a big gainer, up about 6.5%. The CEO, he's going away. There's an activist investor we know involved in this company, and they really want to see some changes. They want to see actually fundamentals at GameStop, not just a Reddit play. You've got also the lithium producers. They were on the move. You had Albemarle, one of the gainers, up about 4%. Evercore, going all in on the lithium names. And then Manchester United, that was also one of the big gainers, up about 7.5%. We're going to talk about this a little bit later. JP Morgan and soccer, I know, but it's just a reminder that it's a business market story.
Yeah, there's always a business angle, okay? That's what I tell myself about this. That's why I love this job. I want to talk talk about some companies that aren't doing so well today. Look, let's start with Tesla. You guys have heard this news. It is among the prominent decliners today, down more than 3.6%. This is coming after the company said that it appears that, or I should say that a car that no one appeared to be driving crashed in Texas that killed 2 passengers. This was a 2019 Model S. NVIDIA also down 3.5% today. It's coming lower after the UK said it would intervene in NVIDIA's $40 billion deal for ARM. So a report from antitrust watchdogs should come by July 30th. Peloton lower today, down more than 7.6%. That was down after the CPSC said it's continuing to investigate incidents of energy. Peloton, I should note, said in a statement that it was, quote, concerned by the commission's warning, and it called it misleading and inaccurate. And people can still continue to use those treadmills, those Peloton Plus treadmills, those Tread Pluses, if they follow all safety instructions and, of course, warnings as well. Finally, let's talk a little Altria, finishing the day down a little more than 6%. That's after the Wall Street Journal reported that the Biden administration could potentially make cigarette makers lower nicotine levels to non-addictive levels.
So key things on the decline. I'm going cross-asset for you now because we're going into the global macro movers, and I start with FX because you want to know what's down? The dollar for a 6th straight day. We haven't seen that sort of losing streak since all the way back to June 2020. So therefore, we have a story of strength from the other FX pairs, in particular the Great British Pound up more than a percentage point, as once again the vaccine rollout is something to really be admired in the United Kingdom, and it seems to be good news music as we see the British Pound up more than a percentage point. Interesting that that's on a day where we actually worried about COVID and particularly some of the variants that are out there, putting some sour tone in terms of risk attitude, but not when it came to commodities, because you've got a dollar lower, and therefore we are seeing commodities on the higher side. When you dig into this for our radio and TV audience, you're seeing gas up 2.6%. You're seeing Brent crude managing to flip-flop from lows to highs, but up 0.5% on the day, as we see therefore a little bit more desire to be getting into oil and commodities as with a dollar weak story. And from a sovereign bond perspective, we see yields actually push up across the world, Taylor, not only in the United States.
100%. It sort of felt like a sell everything day. Remember, we just came off of last week when we had 2 weeks of back-to-back yields lower, price higher. So we come in today and we say, nope, reversal time. We climbed 2-3 basis points on the long end as the yields on the front end remained anchored on the short end, Carol. And, you know, unfortunately, what we say is, well, maybe the treasury market's closed, but crypto, it never closes. It was not your safe haven this weekend.
No, I mean, Sunday, the moves in Bitcoin, we saw it down, what, about 15%. Today, it was kind of all over the map. We were up about 2%. We were down about 3.5%, finished down about 3/4 of a percentage point on Bitcoin. Just looking at my terminal, Coinbase was also down about 2.6%. Listen, it's no longer the rat poison squared that Warren Buffett called it a couple of years ago. It's definitely much more accepted, guys, but we are seeing an increasing amount of regulators coming into it, and I think there's some nervousness in the market.
Yeah, a little bit of nervousness and a little bit of a shakeout here.
Yeah.
Of course, we have a great story on the Bloomberg terminal right now saying plumbers buying Dogecoin shows retail investors power in crypto. That's all you need to know right there.
That's a sign to sell. I'm sorry. When plumbers are talking Dogecoin. That's an entry point. Are you sure?
The new canary in the coal mine?
Yes.
Meanwhile, though, I mean, maybe the mood music to sell maybe your stock market today was more the concerns about COVID, the variant levels, and the headline that we've just got, the State Department saying, look, they're cautioning against travel to about 80% of countries at the moment. There is still that concern about traveling. There is still that reopening trade that we have to question, Tim, from time to time.
Yeah, we do. And look, we talk about this a lot on Bloomberg Radio, the idea that just because one country or region is vaccinated, like the United States, for example, we are doing very well here. We are very lucky here. UK, same as well. It doesn't mean that the pandemic will end when one country is vaccinated. It needs to be vaccinated in the entire world. And this is exactly why we are seeing economic repercussions of this, because this affects travel. It affects corporate travel. It affects tourism. And it affects the economic recovery if these other countries cannot get the virus under control. We are waiting United Airlines earnings. Hopefully we'll get some insight into how the company is thinking about international travel and demand in just a few minutes.
Analysts are hoping that we get some guidance from there, but frankly, I have to say that guidance is all over the map when you take a look at 2021 estimates. Maybe an adjusted loss per share of $10.99, but frankly, the range is up and down 2-3 standard deviations on either side, Romaine. All we have to say is Jeffrey's really hoping that we've started to show signs of recovery to 2019, but we are still down big time in the last 2 years on a year-over-year basis.
Yeah, and obviously they're dealing with a lot of cost issues they still got to deal with, waiting on United, waiting on IBM, and of course, there's the big news of the day. Carol.
Yeah, exactly. And let's not forget
Manchester United.
Manchester United.
Oh, the other United.
The other United.
Is that,
Let's
is
not
that deal
forget.
going to really happen?
Well done,
Caroline, you're
Caroline.
our chief soccer football expert. Is that what
Is
it's
this a
called
big
over there?
deal, Caroline?
Massive deal. I think the whole of the United Kingdom is in like shock about this, about, you know, the rules of the game's getting changed up. We don't like it when big winners club together and take themselves off to a private party and play it out and leave some of the, well, the teams that could just rise from the ashes and take it away. But money talks, Carol, money talks.
Well, listen, we see that play out in the U.S. sports teams, right? What they're looking to do with soccer over in Europe is very much what we already do here in the United States, and it really lets those big franchises, Tim, I know you love football, that's a not, but nonetheless, it lets those big franchises really dominate.
Yeah, it's a point that Alex Webb made on Quick Take today and in a column today. That is exactly what is happening. It's turning more and more American, and fans are not happy about it.
All right, folks, that's going to do it for our cross-platform coverage. What? What did you say?
They'll live with it.
I just wanted to get that in. All right, that's going to do it for our cross-platform coverage of the market close on Bloomberg TV, Bloomberg Radio, and on YouTube. We'll be back tomorrow at the same time and the same place.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, just want to mention IBM crossing the Bloomberg terminal. Their first quarter revenue, $17.73 billion. That is a bit of a beat, and it's reaffirming its full year outlook. So again, this is going to be one of the names. I'm just going to track the trade here. Right now, little changed in the after hours, but again, one of the big companies, certainly within the tech world. IBM shares did finish the day. I'm just looking at the regular trade here, Tim. They were down just about 1/3 of 1%.
Yeah, as you mentioned, Carol, first quarter EPS coming in for IBM at $1.06. First quarter net revenue higher by $955 million.
Right, and now the stock is up about 2.9% here in the after hours. So investors certainly liking what they heard. I think that reaffirmation, I should say, of their full year outlook, that's a big deal. Like, this is what investors want to get from these earnings. It's not just about what you did for me last quarter, but what are you seeing for the rest of the year?
Yeah, United expected in just a few minutes. We'll bring those to you live when we get them.
We will indeed. You have a good evening. We'll see you
Thank you.
tomorrow. Right now, over to World and National News and Nancy Lyons. Hey, Nance.
Hey, Carol, the jury is close to beginning their deliberations in the Derek Chauvin trial involving the death of George Floyd. Defense attorney Eric Nelson, in closing arguments, said he wanted jurors to remember the prosecution must prove that the former Minneapolis police officer killed Floyd by using his knee on his neck.
You start with the proposition that Mr. Chauvin is innocent of these charges. The state has to advance substantial evidence to convince you that the only doubts that are remaining are unreasonable doubts.
Nelson says several outside factors could have caused Floyd's death, including his drug use. Prosecutors are now giving their rebuttal. They say Chauvin had to know he was squeezing the life out of Floyd as the black man cried out over and over that he couldn't breathe. They say it wasn't policing, it was murder. An ally of Russian opposition leader Alexei Navalny says he is continuing his hunger strike in a prison hospital.
Navalny has been on hunger strike for 3 weeks to protest his conditions behind bars. He was transferred to a hospital at another prison this morning, a day after the U.S. warned of unspecified consequences if Navalny dies behind bars. Earlier, prison authorities had said Navalny was in satisfactory condition and had agreed to vitamin therapy. The head of Navalny's anti-corruption foundation says the hospital transfer proves his condition is so bad, quote, even the torture chamber admits it. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You are listening to Bloomberg Business Week. Carol Masser in our Interactive Broker studio. Charlie Pellet of Bloomberg News joining me. And Charlie, I don't know if you saw this earlier, and this as we, of course, are awaiting some earnings from United Airlines that should cross the Bloomberg at any moment. But earlier today, this morning, United came out and says they're going to fly 3 new seasonal routes to Europe. The carrier trying to capitalize on business and destinations now open to Americans ready to fly internationally. But then You've now got the State Department to caution against travel to about 80% of countries. That's different than restricting.
Indeed. And as I saw that headline, though, I'm thinking Bloomberg Business Week road trip to either Dubrovnik, to Athens, to Reykjavik. I'm in too. What's stopping us, But, these are all fantastic hotspots. Delta announcing flights there. Dubrovnik, just an amazing place, so-called Pearl of the Adriatic. Lots to do there, lots to see.
You sound like a travel brochure, kiddo.
I got to tell you take a look at pictures of Dubrovnik, and if you happen to know anybody who loves sailing, that is definitely a harbor and a port that you want to sail into.
Where is that?
In Croatia.
Croatia.
Absolutely amazing place.
Actually, I watch, don't judge me, but Below Decks Mediterranean, and they're often in Croatia.
Exactly. And it's funny because
Croatia, or also Below Decks sailing. I think that's the ones where they go to Croatia more often.
Where naturally they hire a lot of people who seem to be able to not get along in the workplace, hence makes for compelling television. But what's interesting...
I just want to see the sails up, and I just want to see them on the water sailing.
Exactly.
Very little of that.
And what I like to do is when I see some of those vessels in the Mediterranean, I've got a ship tracking app. Immediately, I like to pull up, and I know the show's recorded, but I like to see where the ship or the vessels are now. But also, too, Delta, by the way, announcing other destinations. I mentioned Reykjavik, and also flying into Athens as well.
But it was interesting, Below Deck, either Mediterranean or sailing, like they were dealing with the virus. I remember watching the season, and it was just as the virus was taking off. And what's really cool is it's an international cruise, so they were hearing from family in Italy or family in, pick your place in the United States about how serious it was. And it was just watching it play out real time. It's tough, the travel industry. What?
Next time around, we talk about the Love Boat.
All right, cue that music. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Jump for IBM after hours, up now by 4.42%. IBM posting its first revenue gain in 11 quarters, driven by demand for cloud services, suggesting Arvind Krishna's turnaround plan is starting to bear fruit. IBM said sales increased 1% to $17.7 billion. That did beat the $17.3 billion that analysts had forecast, according to data compiled by Bloomberg. But again, checking shares of IBM up now by 4.4%. We are awaiting the latest from United Airlines Holdings, UAL. A down day on Wall Street. Stocks did retreat from records as investors await the heart of the earnings season, along with more economic data later this week. S&P down 22, down 0.5%. The Dow down 123, down 0.4%. Nasdaq down 137, a drop of 1%. 10-year yield 1.60%. Gold down 0.3%, 17.70 the ounce. And we saw West Texas Intermediate crude up 0.5%, 63.43 a barrel on WTI. Again, recapping, equities lower, 10-year yield 1.60%. Quickly checking IBM one more time after hours, up now by 4.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. And as Charlie mentioned, we are awaiting earnings from United Airlines, but let's not forget that they just about a month ago, or maybe a couple of weeks ago, April 12th, really came out with preliminary results talking about first quarter preliminary total revenue of $3.2 billion. That was a little light from estimates at the time. They did talk about first quarter average daily core cash burn of $9 million a day. They observed forward acceleration in customer demand in March. Again, this is what they reported on April 12th. So this will be some final numbers. And as soon as they cross the Bloomberg, we will get into them. In the meantime, let's talk about it with Peter McNally, global sector lead at the consulting firm Third Bridge Group. And he joins us on the phone in New York City. Peter, nice to have you here with us. We are awaiting the final numbers when it comes to United Airlines specifically. But as you reminded us in some advance notes, we heard from the company a couple of weeks ago. Are we expecting anything to be significantly different when they report finally for the quarter?
Well, I think the key thing is going to be the outlook on a number of fronts. And, what we heard from Delta last week on the international recovery was a little bit disappointing. Domestic travel's picked up. We see the numbers of TSA travelers, and that's encouraging. But for an airline like United, the two real drivers of profits for the full recovery are going to be international and business travel. And unfortunately, to date, those things haven't been, particularly great. Two other things, though, we're looking at is the cash burn outlook, that you referenced, and what is going on with their Boeing aircraft, which could have, broader implications across, the entire economy. There was another incident with the 777 in the first quarter. So this is something we are always, on the lookout for.
Right. They got rid of 16 MAX jets, at least removed them from service because of an electrical issue. That happened on April 9th. So we continue to watch that because, listen, that adds up to costs on the other side. Hey, how do you make sense, though, of what's going on in the airline industry, and specifically for one like United, where international is really important, business international, really, really important. And we had a headline cross about 10 minutes before the close today of the U.S. State Department to caution against travel to about 80% of countries. Caution. They're not saying you can't do it. But nonetheless, if I was looking to make an international trip, I'd probably, unless I really had to, I'd probably put it off as a result of that.
Yeah, there's definitely caution, and even if you wanted to do it, it's kind of hard.
Yeah, that's true.
Borders aren't open. It is difficult, and there is some genuine enthusiasm about domestic travel. And, if you were to plot how the recovery is going to unfold.
Hey traders, I'm planning to sell short euro. So if you're looking to sell short euro or trade euro, we probably will hold it until tomorrow. So you don't have to worry, you don't have to pay for it, because if you hold overnight short position, broker pays you. Okay? So I'm planning to sell short at 120.36.1. So you're welcome to join this trade too. I'm going to place the order to sell short, and let's see if we will get filled this position. Okay, stay safe. I'll speak to you later.
So this is only going to get more complicated. Flying 737s or A320s, the leisure aircraft, the single aisle aircraft, that's going to be okay. But trying to unstack a 777, a 787, these long haul international flights, and finding the pilots who have been working long enough and are ready to go isn't going to be easy. So this is something we're really watching closely at Third Bridge, is just getting those people back to work, when demand does come back for those markets.
All right. So ultimately, when we do get those final numbers from United, what could cross the Bloomberg from United today that would make you a little bit more cautious on United specifically, but maybe even the sector more broadly?
It would be the cash burn. Really is, look, everyone wants to get back to normal. And this industry has avoided wholesale restructuring because capital markets have given these companies money, the government has given these companies money, and they've always been expecting a V-shaped recovery. It has taken longer. They've got lots of liquidity, but we're really focused in on how much cash they're burning and when they turn cash flow positive.
Is this an industry that's going to need another handout from the government, possibly? And just got about 40 seconds left here.
Well, they've certainly raised a lot of money, to date, and we're even seeing airlines go to capital markets to repay government funds. So, as of now, if this recovery does continue and the domestic market, as we said, has been encouraging, we don't think that the government is going to have to step in, but, this whole thing has taken longer than anyone anticipated. And, the airline industry is probably the last to come back of any of the sectors that we've been following through this whole crisis.
Yeah, it's pretty remarkable that we haven't seen more bankruptcies, but of course they did get some help from the government. Good stuff, Peter. Thank you so much. Peter McNally, Global Sector Lead for Industrials, Materials, and Energy at Third Bridge Group, their consulting company, joining us on the phone in New York City. Still waiting those United earnings, but as we mentioned, they did pre-announce about a couple of weeks ago. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, yes, indeed. You're listening to Bloomberg Business Week on this Monday. Coming up, we've talked about this in many different ways and different forms over the past year, and that has to do with really understanding your company, your brand, and the purpose of it all, and tying it all together and getting employees motivated. We're going to get into that with the founder and CEO of the advertising and marketing agency, Strawberry Frog. He's got a new book out. It's called Activate Brand Purpose, and we'll dig into it in just a moment. In the meantime, we've got to dig into those United Airlines earning. I'm looking at the stock, Charlie, down about 1% in the after hours.
Activate earnings. Here's what's going on. UAL, United Airlines, first quarter adjusted loss of $7.50 per share. Estimates were for a loss of $7.02. Right now, look at UAL flying lower now, down by just about 1%. IBM also out with earnings after the bell. It did post its first revenue gain in 11 quarters, driven by demand for cloud services, suggesting Arvind Krishna's turnaround plan is starting to bear fruit. Shares after hours, they are trading lower now, trading higher on IBM, up by about 2.3%. Down day across the board today. The Dow, the S&P, NASDAQ all retreating. We did see records on Friday, but today, a red day for the stock market. Investors awaiting the heart of earnings season. More economic data later in the week as well. S&P dropped 22 points, down by 0.5%. The Dow down 123, down by 0.4%. NASDAQ down 137, a drop there of 1%. 10-year yield, 1.60%. Gold down $5 the ounce, lower by 0.3%, 1770. And West Texas Intermediate crude up 0.4%, 63.40 for a barrel of WTI. So it was a down day on Wall Street today. Vance Howard is CEO at Howard Capital and Management. He was our guest right here on Bloomberg Business Week.
But yeah, we're bullish, and I would be buying into this. And you know, I think 6 months, 12 months, 18 months, I think you'd be happy you did.
And Alicia Levine is Chief Strategist at Bank of New York Mellon.
You should be invested. We think ultimately the kind of bullishness we've seen in the upward action and the breadth of the market means 6 to 12-month returns from here will be higher. That is the case historically. But, you know, there are pitfalls along the way, and we shouldn't be surprised to see it. It's entirely consistent with an upward-moving market, really in the beginning stages of a recovery.
And we're keeping an eye after hours on Emergent Biosolutions. Shares plunging today, down 12.6%. Regulators told the company to stop making Johnson & Johnson's COVID-19 vaccine at a company facility where 15 million doses of an ingredient used in the vaccine had to be discarded. So again, Emergent shares down today by 12.6%. Recapping, S&P dropped 22 points today, down 0.5%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Thank you so much, Charlie. Well, a little more than a year and a half ago, we heard from the Business Roundtable. They came out, they talked about the purpose of a corporation, multiple stakeholders, yes, shareholders, but so much more, understanding all of them. And that has really come into focus big time during the pandemic, the past 13 months, as we thought about inequities, we thought about racism, we thought about the gaps getting wider in our society. And as a result, we've seen brands stepping up, speaking out, and how that is more important than ever. Our next guest gets that. We welcome Scott Goodson. He's founder and CEO of the advertising and marketing agency Strawberry Frog, has worked with Walmart, SunTrust, Emirates, P&G, so many companies, Coca-Cola. Scott is out with a new book, Activate Brand Purpose, How to Harness the Power of Movements to Transform Your Company. And he joins us on the phone in New York City. Scott, so nice to have you here with us. First of all, how are you and what's the past year been like for your world? I mean, you talk to a lot of companies, and I'm just curious what it's been like over the last 13 months.
Well, pretty much appreciate being on the show.
Sure.
We wrote Activate Brand Purpose because of what we experienced over the last year. A lot of CEOs and heads of HR have been grappling with this concept of purpose for the last 5 years or so. Everyone's been talking about it. The problem is that, it hasn't really been activated. And then all of a sudden, everything changed, the sky fell, and people who had activated purpose had a rudder in the water. They were able to kind of navigate the seas. But those that didn't were kind of thrashing about. And I think what we're seeing coming out of purpose is that coming out of the last year is that companies with a purpose that is activated at the core of business strategy are thriving.
Well, and I want to go right to, I love that you started with HR because it's one of the things that caught my attention in the book about COVID-19 and the changing role of HR. You're right, the old HR model is no longer fit for purpose. I do feel like employees, consumers really looked at companies differently. Employees looked at their employer very differently during COVID. How has that changed? And I know you've had a lot of conversations with CEOs about this.
We had a wonderful opportunity to connect with the CEOs of some of the largest companies in the country. I spoke with Hans Vesterberg and also Christy Panbiachi, who's the CHRO of Verizon. We've spoken with some of, Bill Rogers of Truist. And the companies that are getting it right understand the importance of activating purpose at the cultural level within the organization. And the people who really know that are the people directors. And I think historically the HR group has been almost an extension of the legal department in that they've really focused on risk management. But in today's world, where we have so many emotional, physical, and financial well-being issues faced by American workers, it's really the CHRO's moment in time. It's really their opportunity to shine and stand up. And many of them are doing just that. And the book, looks at how do you deal with a number of issues? How do you deal with the fact that people are coming out of the past year with concerns about their health and welfare? How do you deal with the fact that, people are joining companies and working for companies that work remotely, who haven't ever been inside an office? So the importance of culture, bringing to life the vision of the CEO, is really a challenge. And there's another element, which is we're living increasingly in this peer-to-peer world where people are getting, their inspiration and let's say they're being moved by their peers. It's a time when you can't really lead with mandate from the top anymore. Those days are gone. You really need to lead a corporation by creating a movement inside the organization that people feel like they're belonging to something bigger. So, right. Top-down mandates just don't work anymore.
That mirrors something. I was just talking with the CEO of Tapestry last week specifically and talked about during the pandemic. It was no longer, sales associates who were on the floor who had to make decisions during the pandemic about how to do something. They no longer had to kind of go up the chain of command, that you needed to empower employees to be kind of part of the solution. And she was saying that was a real change in terms of what they were doing going forward. Hey, Scott, sit tight for a second. We're going to do a little bit of news, but I want to talk a bit more about some of what you've written, some of the terms. You talk about being a galvanizer. You talk about these movements, and activating purpose is different from just purpose. So we'll dig a little bit deeper with Scott Goodson, founder and CEO of Strawberry Frog. His book is Activate Brand Purpose, How to Harness the Power of Movements to Transform Your Company. Very timely and topical considering the past year. All right, let's get back to world and national news. Nancy Lyons in our DC studio. Hey, Nancy.
Hey, Carol. Closing arguments are winding down in the trial of former Minneapolis police officer Derek Chauvin, charged in the death of George Floyd. Prosecutor Jerry Blackwell is giving the prosecution's rebuttal. He says Officer Chauvin squeezed the life out of Floyd.
Here, ladies and gentlemen, we're only required to show you that Mr. Chauvin's conduct was a substantial cause, a substantial factor in Mr. Floyd's death.
Blackwell says Chauvin did not look worried by the crowd or by Floyd, had his hands in his pocket and his knee on Floyd's neck. Defense attorney Eric Nelson says Chauvin did as he was trained to do.
I submit to you that the state has failed to meet its burden of proof beyond a reasonable doubt.
If convicted of the top charge of second-degree unintentional murder, Chauvin could face a maximum prison sentence of 40 years. 26 years ago today, 168 people were killed at the Alfred P. Murrah Government Building in Oklahoma City in a domestic terrorism act. U.S. Attorney General Merrick Garland led the prosecution of Timothy McVeigh, who was convicted in that attack. During a remembrance ceremony today, Garland said domestic terrorism remains a real threat.
Although many years have passed, the terror perpetrated by people like Timothy McVeigh is still with us.
Garland says the Department of Justice is pouring all its resources into stopping domestic violent extremists. Russian opposition leader Alexei Navalny has been transferred to a prison hospital. He's been on a hunger strike. Some allies say he's near death. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Charlie Pellet, you like oat milk?
Who doesn't like oat milk?
I love oat milk. I've got like an
I thought
Oatly daily. What?
No, I thought you said oatmeal.
No, I don't like oatmeal. I like farina. I like farina a lot. A little cinnamon, a little butter. The reason I bring up oat milk is just crossing the Bloomberg terminal. Oatly Group filing for its IPO, seeking a NASDAQ listing. I know Oprah, I think, has liked this company a lot. I can't remember if she's an investor in it, but I think, I don't know, it was a couple months ago that we were talking a lot about it and that it would be coming to market. And
Exactly.
Here you go.
I was waiting to hear your
Oh, yeah.
imitation of Oprah. I've got IPOs for you, for you, for you.
I've got oat milk for you and you. Oprah does wrap it. I think Jay-Z does too. So kind of interesting. Anyway, we're watching that because I just crossed the Bloomberg terminal. Also watching this great story by Patrick Clark and Natalie Wong of Bloomberg News about New York City's developers plowing ahead with ambitious plans to reshape our lovely city here in New York.
Indeed, big plans. Vornado Realty Trust recently said it would demolish the Hotel Pennsylvania and add an office tower taller than 1,200 feet. That's right next to Madison Square Garden and near Grand Central Terminal. And I mention these because these are a couple of major landmarks that either people in New York City obviously know, but also our listeners across the country and around the world. These are, places that they come to and visit and landmarks that they know as well.
And let's keep in mind that office construction in New York City ground to a virtual halt in the second and third quarters of last year. Developers, though, beginning work on $2.7 billion worth of projects in the final 3 months of 2020, according to data from Real Capital Analytics. I like, though, there's a quote in this story from someone at Real Capital saying developers are optimistic by nature. I mean, they're looking ahead. I like
but
that.
also, too, you think about the timing, too. They say, when's the best time to plant a tree? And the answer is 20 years ago. Yeah. When's the best time to build a big building like this? And presumably when times are bad.
Okay, guys, I'm going to move lower. My order at 120.35.7. Just right here. If you're looking to trade euro, you need to move lower your order to sell short at 120.35.7.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet repeating our earlier headline. Oatly Group has filed for an IPO. It is seeking a NASDAQ listing. If you were wondering about the ticker symbol, it will be OTLY for Oatly as it files for an IPO. IBM reporting its first quarterly revenue growth since 2018, thanks to the cloud, up by just about 1.8% right now after hours. United Airlines reporting an adjusted loss per share for the first quarter of $7.50. The estimates were for $7.02. UAL down now by 3%. And Emergent Biosolution shares.
Okay, guys, money never sleeps, and we just sold short euro at 120, 35.7. You guys who followed my trade and want to trade euro, stay with me, and I will hold it until tomorrow. So I'll definitely will not sell it today and overnight. So I'll see you all tomorrow. Please switch on your channel, and from 8 o'clock UK time we'll be working, and you will see what's going to happen and how we will deal with this position. Okay, stay safe, and I'll speak to you later, and have a great evening.
That's Bloomberg.
Bye for now.
It is indeed. All right, Charlie, thanks for the update. I want to get back to Scott Goodson, founder and CEO of the advertising and marketing agency Strawberry Frog. Has worked with well-known companies, Coca-Cola, Walmart, and many, many more. His new book, Activate Brand Purpose, How to Harness the Power of Movements to Transform Your Company. And Scott is still with us on the phone in New York City. Hey, Scott, in your book and some of the research you guys shared with us ahead of time, talked about how recent stats prove that more than 87% of consumers would purchase a product because a company advocated for an issue they cared about, and more than 2/3 would refuse to do so if the company supported an issue contrary to their beliefs. I know that is very much the case with my teenage daughter, my nieces who are in their 20s and 30s, and I know I increasingly look at what a company stands for. This is what you get to, and this is why it's become such an important issue for leaders and for anybody who's running a company.
Yeah, if you're running a company today, you've got to move from toothless purpose to action. You need to activate your purpose and show and galvanize people, your own people, and as well as consumers. They're looking for that. That's what they're asking for. And you have to look outside in politics and in the world around us in culture. We're living in an age of activism. This is the age of the conscious consumer. They're socially aware. They're connected. So, CEOs that are going to succeed are really going to need to move from being woke CEOs to being warrior CEOs. CEOs that can actually put purpose at the core of their business strategy and activate it. And that's what we focus on in Activate Brand Purpose, is helping CEOs, CMOs, CHROs, and even CFOs. Like, if you think about this idea of taking equity and moving it into what I would describe as a M share or a movement share. If you're launching a movement, your company does have a purpose and you're activating that with movement thinking, then why couldn't you launch an M share that people can buy into? Because they're already buying into the idea. And that's highly motivating to your daughter or your son and the younger generation.
Well, and you know what's interesting? I mentioned talking with the CEO of Tapestry, and it was a CEO panel, IMAX, Mozilla, Hyatt Hotels, and we were talking about disruption as an economic driver, that you were forced, your businesses you didn't have a choice, were disrupted by the pandemic. But in some ways, it expedited some of the initiatives that you had in place, but maybe were going to take longer, whether it was a digital strategy or what have you. What is it about activating, though, a brand purpose is really important in terms of an economic driver? And I think it gets back to what I said before about consumers care, right? Clients care about that purpose.
We just completed the second Purpose Power Index. It's the world's first empirical measure of purpose brands. We had 17,500 consumer responses in the United States, and it's absolutely clear this is what consumers are rewarding. They're rewarding brands that are activating their purpose, and they see through brands that only put purpose in their advertising or use it as surface. And it is of, a very high importance to the consumers who are, looking into the world right now. The enormity of the challenges that we face in the planet are coming home to the younger generation, millennials, more than others. Of course, it's relevant to everyone, but particularly in this younger generation, they think that, companies have messed up the world. And they're looking for companies that are willing to put it out there, that they're willing to tackle some of these bigger issues that are threatening the planet, the civilization, or our community. And they're rewarding them for it. And that's why you're seeing, company leaders coming out strongly for things that, historically would never come out for, whether it's legislation or it's for sustainability and climate change. They're coming out because their consumers are demanding that there's action. And that's why you're seeing some CEOs doing it, and they're being highly rewarded for it. And those that aren't, those who, as I said, have embraced what I think is a toothless purpose, in other words, a purpose that they frame and they put it on the wall to rapturous applause by their own leadership or executives, that's not going to do anything. In this new world, you can't just put your head in the sand like an ostrich and hope everything goes away. There's also cancel culture, which is a strong motivation for leaders to activate their purpose.
Well, and it's interesting too, though, and we talk about this a lot, Scott, when it comes to ESG. You can't just kind of slap a label on something, do greenwashing when it comes to ESG, but not actually walk the talk. And that's a lot of what you get into. And I guess that's what you mean by activating purpose, right? You can say, hey, we're a good company, we stand for this, but then, then what?
Well, you have to, you can't just, to your point, greenwash or purpose wash. I mean, we worked on Procter & Gamble strategy, sustainability strategy. We developed a approach called Future Friendly, which took, elements of that company's where they were actually making significant progress in sustainability, and we turned that into a strategy that could be embraced by everyone inside the company. And if you ask people inside that company today, they will tell you that they are making significant impacts in water usage as a core pillar of the strategy. Before that, if you would have just ran an ad and said, well, Tide saves you water, okay, that's a benefit, I guess, because it's cheaper. You don't have to spend so much money with hot water in your washing machine.
Right.
But if you have consumers that are actually looking for sustainability or ESG proof that companies are actually making an impact, you need to figure out a strategy that you can take your CSR, your actual sustainability products and decisions that you're making, and put it in a blender and develop a purpose, and then activate it with a movement.
Hey, listen, just got about 40 seconds here, 45, unfortunately, because we're running out of time. Our audience is a smart audience. It's investors, right? They're looking for trends. They're looking to understand things. What do you think they need to understand about what you are saying and what's in your book? And again, just got about 40 seconds here.
I think the key thing is there are a lot of companies out there that are doing the same kind of thing. The ones that are going to break through are the ones that have a purpose. Companies and leaders who don't just start a business, but actually try to solve a world's problem are going to end up doing extremely well. And those are the companies that will thrive. So, I would invest in a company that has a purpose that is activating it. If all things being equal, if you have, for example, 10 different financial apps that are helping you pay for things, and one of them is taking a stand for something that is highly motivating to a large group of people, that app is going to do better.
No, I agree, and I think the conversation has definitely shifted a lot towards more of this, and we're seeing it. And certainly institutional investors are talking a lot more about this kind of thing. Scott, thank you so much. Scott Goodson, he's founder and chief executive officer at Strawberry Frog. Check out the book, Activate Brand Purpose, How to Harness the Power of Movements to Transform Your Company. This is something you've been listening, the CEOs that we talk to, this is on their minds big time. Have a good evening, everybody. This is Bloomberg Radio.
This is Bloomberg Technology coming up in the next hour. Chat apps, video, collaboration platforms have been the food and water of remote work over the last year. How much will we still use these tools as vaccinations roll out and workers return to the office? We'll pose that question and much more to Slack CEO Stuart Butterfield. Plus, a shocking Tesla crash leaves 2 men dead. Apparently, no one was in the driver's seat. Was the car on autopilot? Tesla shares drop. Plus, a consumer safety watchdog group says people with young children should stop using the Peloton treadmill. We'll have the details and reactions from both companies. And TikTok's popularity skyrocketing worldwide. It is the most downloaded non-gaming app so far this year. We're going to go behind the dance battles, brand ambassadors, and influencers to shed light on its unbelievable presence and potential in a special week-long series. All those stories in a moment, but first, IBM out with its latest report as tech earnings get underway in earnest. Bloomberg's Kriti Gupta has more on the numbers. Kriti, walk us through them.
Emily Chang, look at how big this kind of rally you're seeing in the post-market, this massive move here for IBM after hours, of course, after beating revenue estimates. Now, why is this so significant? It's because it's coming after 5 quarters of negative growth. They've actually never posted growth since all the way back in 2018. Of course, those shares having a good time in the post-market. Let me bring to your attention, though, some of the other stocks that weren't doing so well in intraday trading. I want to kick it off here with NVIDIA. We really saw a little bit of pain here. You did see the UK regulator pushing back a little bit against NVIDIA's deal to acquire the $40 billion deal on ARM